We are live. What is up, everybody? Welcome to Benzinga Live. Those of you coming over from live trading, good to see you. We still have Jerome Powell speaking.
Hey, Spencer, I thought you said it was going to get loud in here.
Oh, I'm sorry. I'm talking a little quieter than I normally do, I think, because I'm feeling self-conscious.
Okay.
Because our office is very full right now. There's actually people here. And I don't want to disturb anybody while they're working. So I'm feeling like if I talk the way I normally talk, I will disrupt the whole office, and I don't want to do that.
Maybe we need a cone of silence. Like we can be as loud as we want in it, and it won't disturb.
Maybe that's true.
Anyone else.
So Jerome Powell is still speaking. When that ends, those viewers will come over here.
The markets are doing well with Jerome Powell speaking.
Yeah. So I can update you real fast.
Stop me if you've heard that before.
I can. Oh, wait a minute. Actually, I don't need you to tell me, because I've got Oh yeah. All right. So if you have not been watching, which frankly, why would you be watching the entire last hour and a half of Jerome Powell's testimony? All you need to know is that he said that they're going to raise rates quarter point in March, and then tread carefully beyond that.
Should we talk about the rate hike real quick?
Yeah. What about it?
Well, I didn't know if we wanted to talk about what happened yesterday at the close. Neither here nor there.
Okay. I mean, I forgot how to read the table. That's what happened yesterday. Anyway, let's start the show. We got a big one today. We're gonna have Ben Kohn, the CEO of Playboy, on the show at noon. We're gonna have Logan Silver from OBR Investing on at 12:30. Nick Shaheen, who runs the Benzinga Options Inner Circle, at 1 o'clock, and JC Kaylor at 1:45. So you know what to do. Smash that like. Let's roll that intro. This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojasik from Trend Spider. We have a breaking news. All right. We are streaming live now to a relatively small number of people, but the number will go up when our live trading show ends, whenever that happens. Let's start with Ford, though, AB. We had some news on Ford today. This is always fun. It's always fun when a company denies a rumor, and then the rumor becomes true. It's always fun when that happens.
Yeah. So what Ford is doing, they're not spinning off its EV business.
No.
They're separating it from its existing business. And so here's the part that I understand, I guess, but I don't really see the purpose of. They're splitting its business up into 3 branches.
Yeah.
New ICE combustion engines, which are just standard cars run by gasoline.
Right.
Its EV branch, which will be called Ford Mach-E, and then
Ford Pro is the last one, right?
Yeah, and then it's existing. So I don't understand why you would have 2 separate branches for ICE combustion engines.
Well, no, I think it's think of it like B2C versus B2B.
Yeah.
Right. You have like
your consumer facing brand and your business.
You're selling your fleets to police departments, for example, right?
And that's what I figured. For some reason, I think it was like the first article I read about it this morning didn't explain that well. That one was it's going to be consumer vehicles, and then like if they're trying to get a deal with the post office, say,
right,
or
exactly.
Whoever that their business side will be different. Their commercial fleets will be different than their consumer.
Yeah.
vehicles.
So just to understand it, it's not a spin-off. It's just a corporate reorg, and it will change how Ford operates internally, and it'll change how they report stuff. It'll change how they report numbers to the public and how their earnings reports are organized, and it'll allow them to break out, metrics for their EV unit in ways they haven't before and realize synergies. The bottom line is, as the release said this morning, the EV side of the EV/electric side of their business is run very differently than the traditional side of their business. And so they're just kind of drawing that line. and say, all right, you are two separate, independently operating entities within our umbrella. Have at it. So the idea here is they're able to realize some synergies and the like. And I mean, the market likes that. So that's why you got a little pop this morning. However, if we look at that Ford daily chart, which I have up on the screen right now, I got to say, Aaron, this does not look great.
Yeah, I mean, I think right now Ford is still in that downtrend, but I think this is bullish long term, right? Down the line, they will have this whole side of the EV business that they'll be able to say, hey, this is how our EV business is performing. Here's how many EVs we sold directly compared to other companies like Tesla, who are, of course, all EVs. So I like it, again, for the long term. I don't necessarily, I'm not really buying the 6% pop today. But yeah, like you pointed out, still in a downtrend on the daily chart, still doesn't look great, but it's interesting. I think Ford is interesting. Would not mind adding here for a long-term position.
There was a long time. So I rode Ford up. I rode it from 7 to like 15, I think, or 7 to 14, somewhere thereabouts. I don't remember exactly. And there was a long time after I sold my Ford where I was like, why did I sell? Why did I sell? Seller's remorse, right? And I'm not really a pure technician. You guys know that. But you know, this pattern, come on. This is head and shoulders all day. Give me that dandruff, right? This is head and shoulders all day. This chart looks not good. Like up here, the longer we waited, like I kept waiting for Ford to break out, and it didn't. All right. And then we gapped down, a month ago. The chart looks ugly. Looks like, it was in a rip-roaring uptrend for 3 months from November to February. It stalled out there, and that's all.
Okay, we can talk about the chart, but you can also talk about kind of what's going on from a macro perspective and different trends. And right now, new and used vehicle prices have increased a lot.
Yep.
There's been a shortage of supply in terms of chips to make these cars, in a way that Ford is essentially guaranteed right now to sell every single truck and car that they are able to produce.
Yep.
All these supply chain issues of them having to shutting down factories and whatnot has already been priced in. So I think as we see the chip situation improve and we see output increase for companies like Ford, the demand's still going to be there.
It's true.
So I think like you said, the chart doesn't look great. I'm just saying I wouldn't want to be short Ford right now because of all this.
The underlying demand is there. This is correct. In terms of the stock, I lamented all the way up, right, from September to wherever, February, right? Ford does not move like that normally. Let's pull up a week. Let's go way long term on Ford, okay? Look at the move that Ford had the end of last year. Right, and compare that to the historical reference, okay? Ford is a slow, stodgy stock. It doesn't really move a lot. I mean, going back here, let's just go back and look at the last 20 years. If you go back and look at 2002 to the end of last year, Ford traded in a range. Well, financial crisis didn't help. So let's cherry pick and let's say post-crisis, 2010 to 2021, this thing traded in a range of 4 to like 18 for a decade. Okay. That's what Ford is. So the fact that Ford as a stock went from 13, it doubled in 3 months, 4 months. That's insane. That's a huge move. We see stocks that make huge moves on the way up also make huge moves on the way down many times. So the underlying case is still there. I'm with you, but I see no reason why we shouldn't expect more of the same, which is Ford trading in a range between, I don't know, call it 15 to 20 for the next few years, because that's just what Ford does as a stock. Now we'll see if the electric demand and the EV demand is as robust as the pre-orders would indicate they are, in which case maybe time to reassess that. But Ford is just not a fun stock. Sorry.
Yeah.
It's not.
No, I agree. And I think there are a lot of stocks out there. I mean, I don't know. I don't know if there are any studies done on this, but Ford was up like I think more than 100% throughout 2021.
Let's zoom in on the chart.
So if you go in,
it's been just a huge run, just a massive run for Ford. But again, it doubled in 3 months, and it's Ford. Like, this isn't some growth tech stock.
But here, what I was gonna say is
it's a 110-year-old company.
If you double in a year, gain 100% in a year, and then the next year you draw down 50%.
Yeah, you're still up.
You're still up 50% in 2 years, which is great.
Sure.
Sure.
But tell that to the person that bought the high.
Yeah, if you're in Ford at 25,
tell that to all these people. Tell it to all these people that bought Ford.
If you're in Ford at 5, I mean, what did we open at last year at 2021 January? Like
January 2021, we were at
7, 8, 9.
Call it 8. Call it high $8 range. Call it almost $9. So from 9, and then we closed the year at what? 20. From 9 to 20 in 1 year. It's amazing for Ford. So, again, not bearish the company at all. I owned it last year for a time, but just think if you're buying Ford thinking that it's going to go back to 25 like in a few months, you are probably going to be waiting longer than that, is my take on Ford.
So today we've had some interesting movement, and Spencer, if you want to do me a favor and go into the advanced news feed and just see if there's any
the advanced news feed, I can do that.
See if there's any
wait, I have to pull up
big headlines from the Powell, because I saw the markets were doing well. I don't know if there was like one specific thing that he said.
So he said a lot. Obviously, you guys can see. I just did a key. This is Benzinga Pro. I did a keyword search on the news feed for Powell. All the headlines we have today that mention Jerome Powell are here. It's a lot. The biggest takeaway is that he acknowledged that they're going to raise rates in March, probably a quarter point. That's what the market said, and was his typical non-committal self in anything beyond that. And
we've had some interesting kind of intraday movements so far today. Salesforce reported yesterday. CRM opened green, up about 3%. Actually went red on the day. Another stock opened red and is now green, which I'm surprised by.
What's that?
It's actually not a stock. It's a fund. See if I'll give you a hint.
That doesn't narrow it down. That does the opposite.
An ETF that opened red. I would say, okay, I expected that.
Gonna give me a little more of a hint than that.
No, it's green. All right, it's RSX.
All right. I had a feeling that you were going to bring that up today. I didn't think that's what you were referring to, but all right, let's bring up that RSX chart now.
Well, I just think it's interesting, like opening red, expect
Shelly, are you here?
What has happened in the past since the markets opened that would cause the Russia ETF
Shelly, where you at? Shelly, I feel like, deserves to take a bow on this one. All right. Shelly did what I could never do, and she bought some, what'd she buy? She said she bought Leaps yesterday. I think she said she bought Leaps on RSX. And Shelly, now what are you doing? Now what, Shelly? You bought RSX yesterday. I want to know what your plan is, okay? Seriously. Did you sell already?
Oh, and then the other stock that had...
Because I don't know why it's up. It makes no freaking sense.
The other stock that had a really interesting move today was Lockheed, LMT. Or limited as
why does it call? I meant to ask. Why does it call it limited? It makes whatever.
I guess the ticker.
It's Lockheed. What was Lockheed doing? Oh yeah, it's giving back. Oh no.
So Lockheed Martin was down 5% at one point today, which to me it was selling off as if there was de-escalation news, like the war was over. So unless there wasn't, I mean, that seemed like a very easy buy the dip opportunity, right? Lockheed Martin down 5% in this environment, and it's since, it's traded higher 3% off its lows today already.
Yeah, that's a pretty remarkable chart. Wait, can I go back to RSX for a second?
Yeah, of course.
So I would love to get the chat's opinion on this too. So I went on that rant yesterday, right, that the RSX is a broken instrument. So there is your argument to be made that a broken, actually I should say it's half broken. It's half broken. That half broken is better than fully broken. In other words, RSX is trading off of guesswork, basically. but that's better than nothing, right? Like it's better to have, in this case, a U.S. listed ETF that holds a basket of shares in London that is based on a frozen market, a closed market in Russia. It's better to have some price discovery than no price discovery. So, in other words, if those London shares were halted, or if RSX was halted, or whatever, we would have absolutely no idea how to value these Russian companies right now, right? RSX, at least, the fact that RSX is trading, it at least gives us like a clue. It may not be right, but at least it's something. It's something to hang your hat on. That okay, broadly speaking, Russian securities, Russian equities, Russian stocks are up today, from the open, right?
And it was
so is that right or wrong? I would love some opinions here. I would love your opinion, but like, is it right or wrong? You have this instrument that's based off of guesswork, but at least it's providing some. So that's the argument for RSX, right? At least it's providing some sort of price transparency into what is happening, which is better than not knowing anything at all. I don't know. It's something to think about, right? Something, next time you're lying in bed, can't sleep, I want you to think about that. All right.
Was the Russian stock market open today?
No.
Still closed?
No. Still closed. Yeah. John Lewis says price discovery is better. Yeah. So at least we have some price discovery here. But again, it may be very, very wrong. Whenever the market opens over there in Russia, RSX could, rip to, 16 or go to 2. We don't know. I guess knowing is better. Even if the knowing is wrong, is the thing. So whatever. I guess we'll find out whenever the market opens over there. That'll be the true test. That'll be the true test of how well this fund actually worked. Did it function as designed? I don't know why it's up today. The point is, no one knows why it's up. That's the whole point here. The Russian stock market. See, that stat in and of itself is right and it's wrong. Right?
I mean, the market wasn't open yesterday, was it?
Right. It wasn't open. You can't be down if you're not open. But how do we know that it's down, quote unquote, 30%? RSX is your proxy. That's your proxy. That's your answer. This is your proxy for the Russian stock market right now. Okay. So yeah, technicality, but weird stuff. Weird stuff there. What else did we want to do? We had a few more things. Oh, let's do AMC, and then we're gonna bring on Ben Kohn, the CEO of Playboy. They also had earnings overnight. We want to talk to him about that. But AMC had earnings last night. Let's get the chart up on the screen. Did anyone else watch the call or listen to the call? We streamed it last night on our YouTube channel. I continue to be amazed, Aaron, at the way in which Adam Aaron projects himself to the broader investor community. It is so the opposite of what GameStop did, right? GameStop, when they went viral, their stock squeezed to the moon, they battened down the hatches and they didn't say anything to anyone. And AMC went so the other way, and they continue to claim victory. He's claiming victory, right? He's doing a victory lap here. That's what that entire call last night was, a giant victory lap, right? I'm not really sure why, personally. Maybe because the company is still in business, and that in itself is a win. But I mean, I think the chart speaks for itself. They are throwing shit against the wall and seeing what sticks.
So
no doubt about that.
The stock's down 2.5% today, right?
Yeah,
now?
Yeah. I'll bring up intraday so you can see what. Yeah, it's not a lot of movement.
And I mean, the numbers were good, not great.
Yeah, Craig. Yeah, so they've got the popcorn thing going on, right? They got AMC branded popcorn that is going to be in stores later this year, and they're doing this food delivery partnership with that. So let's list all this stuff that AMC is trying. Okay?
Wait. Food delivery.
Yeah, we'll get there. So AMC popcorn brand. Okay, they're going to have AMC branded popcorn in stores at some point this year. they're doing this food delivery partnership with AMC, where you can, or with Uber, which I'm not quite clear about, frankly. But
so I'm gonna I want to watch a movie at home, and I want to order like $10 ice and $10 popcorn.
Yes.
I'm gonna pay $50 to get an Uber Eats to my house.
Hey, don't shoot the messenger. All right, they're doing NFTs, right? You guys know that they launched a few NFTs around the Spider-Man movie, and they're doing that. They will be you'll be able to pay for AMC tickets with Shiba Inu and Dogecoin at some point. To quote Aaron Amarin, in the next few weeks.
Yeah,
in the next few weeks.
Originally, they said at some point in 2020.
No, they said March.
Okay,
where it is March. So March, right? So they're doing the NFTs.
That can't be profitable. The crypto thing.
They're doing the NFTs. They're doing the crypto payments. They're doing the food delivery. They're doing the popcorn. They are doing the variable pricing is interesting. I had no idea before yesterday that it's common in other parts of the world for a movie theater company to charge different rates for different movies, and also different rates for different seats in the theater. Because in the U.S., it's a flat rate. Every movie costs the same, right, for the consumer, and every seat is the same price. But that's not how it is over in Europe, and that's not how it's going to be in the U.S. anymore. They're going over to that model. So, next time you want to see the Batman in theaters in a few weeks, Aaron, you want to sit in the best seat in the house, you're paying extra for it.
All right.
I guess
That's innovative.
I guess I can't be mad about it if it's normal everywhere else. It just isn't normal here.
Yeah, I mean, I think right now with the way we consume media and stuff, I think the problem is you price out at a certain point, right?
Well, that's the thing.
I'd pay $12 to go see the new Batman, but you raise that price to $20 because it's the premiere. I'm a lot less likely to go pay $20 to see the new Batman when I can wait 2 weeks and watch it on HBO from my couch or whatever it is.
You're saying the elasticity of demand, right? Isn't that the economic concept there?
Yep.
Price elasticity. Hard word to say, but yeah, there's only so much money you're willing to pay to go see a movie, right?
Especially when you have other options, which we do. I mean, even before you could watch all these movies at home, movie tickets were expensive and going to the movies were expensive. And now that you have these other options, it's like, man, I mean,
and then the last thing that Greg is pointing out is the alternative content angle, right? The only thing in my mind, the only thing to me that would really make me want to reassess how I think about this business is if they got sports rights and they had the ability to you could go watch sporting events at a movie theater, right? Like
they're doing that. They're doing UFC fights.
No, they do UFC. I guess I meant like the NFL is really what I'm referring to.
I don't know about you, but even if AMC had football, I'm not going to a movie theater on Sunday to watch football.
How is it different than going to the bar? I mean, if they can sell alcohol. Is there
here's the thing. So Gregory Anderson is saying they wish they had beer. Last time I went to the movies, they did have, and I can't remember if it was an AMC theater or not, but they did have like a bar out in the lobby. Like, but is AMC doing that or no?
The AMC that I go to has a bar.
Okay, that's why. Because he was saying that he wishes they had beer, but they do. Like not
all of them. Not all of them do. So there was no color on the call about that. He said they're having conversations with the leagues. But if they were to get like broad-based rights, the ability to actually broadcast live sports beyond UFC and beyond esports, no offense to those properties, like then I would try it. Let me put it this way: I would try it. I'd be very curious to see what that experience. Maybe I would hate it. I don't know. But
I'm just picturing it like sitting in a movie, even if you're allowed to, like obviously to like talk and stuff like during a football game. Like I feel like just sitting in a movie theater.
It's too cramped. Is that what you're saying?
Not too cramped. It's just not like the environment I'd want to watch football.
All right. Okay. We'll see.
I would try it too. I would try it too.
Yeah, I would try it. I would try it once. Anyway, that's the story about AMC. A lot of balls in the air. And the whole tone of the call was just a gigantic victory lap. So kind of a weird thing.
Well, like you said, I mean, the company's still in business. It's one of those companies that before COVID wasn't in great shape. During COVID, their business model got hammered. Somehow the stock went up 1,000% or whatever. But
I just can't get past the fact that Adam Aron sold I forget the number now, but he sold a lot of his AMC shares. And it's just like, I mean, good for him, right? But I mean, to the people that are holding this or holding until the mother of all short squeezes, how long are you willing to wait, you know? Because holding out for what was a once in a lifetime thing is, you're probably going to be wrong for a long time. So I don't know. I don't know if anyone is still in this. I'm sure I know people are still in this thing, but the people that are still in this thing, I hope they have other investments.
Well, look, can we zoom in a little bit on that volume bar down below? I want to see what the volume has been doing the past couple months.
It's fallen. It's not falling off a cliff. That's not the right way. It still trades, 17 million shares. Here it's trading. Yesterday it traded 44 million shares. Okay. Today it trades 17. So it trades like 30, 40, 50 million shares a day. So it trades, right? It's nothing compared to where it was last year, obviously. But I don't know. I hope everyone that owns the stock owns other stuff. That's what I'll say about that. If you want to have a small piece, go for it. Do whatever you want. But there's more to life than just this one stock. Hey, let's bring on our first guest of the day, I think. I see him here backstage. Ben Kohn is the CEO of Playboy. They also had earnings last night, as I mentioned. Another company that's sort of in transition here as they sort of like reposition themselves for this century and get exposure to NFTs and the like. So we have Ben Kohn here backstage. Let's get him on the show right now. Give him our special guest intro. Hey, Ben. How are we doing today? Welcome to the show.
Thanks for having me. Doing well.
How much would you spend? Yeah, how much would you spend to go to the movies is the question here.
So I used to be in the movie business. I wouldn't spend a lot anymore. I think there's been a fundamental shift. But if Adam's interested, we can license him the rabbit head to create rabbit head popcorn. So
hey,
I help him on that.
There you go.
I think he's probably interested. Seems to be interested in a lot of things right now. All right, Ben, high level overview on your earnings that you announced yesterday. Revenue increasing year over year. Seems like you guys are turning the corner here. Give us the top down view of the quarter and the forward looking guidance.
Yeah, look, I'm thrilled with the quarter. It's also frustrating as a competitive person. I want to win. We left a lot of money on the table, not because of internal issues, but because of the macro climate with supply chain, COVID-related issues in the fourth quarter, having to shut down their sales around Halloween a week early just because of labor issues and warehouse fulfillment issues. But look, we're continuing to stay very focused, execute on our business plan. We raised guidance for the year to $350 million of revenue. And look, we have more demand than we have supply right now. We're just establishing our infrastructure, bringing in the right people to execute, and very optimistic about the future based on the strength of our brands.
I was actually going to ask you about the supply chain because you mentioned that in the call, but I was going to ask you to elaborate on how specifically the supply chain impacting your business. I guess because you are a consumer products business, a consumer products brand. So can you just elaborate more on the warehouse issues and other supply chain issues and how it's weighed on the business?
Sure. I mean, the fundamental issue with the supply chain is things don't show up when they're supposed to show up. And when they do show up, they show up in such bulk sometimes that it takes you weeks to get through it, right? So if you think about a manufacturing process that is running smoothly, you have enough employees to deal with the output every single day. Some days you have zero input, right? So you have no product showing up, and then you get a load of product that takes you days and days to get through. And then you couple that with our retail stores for Honey Birdette, where you're launching a new product, you're marketing that product on social and other means, but the product doesn't show up because it's stuck in the port system. And so it just screws with it. But look, we had a great quarter overall, $96 million of revenue, 247 for the year. We were free cash flow positive in the fourth quarter. We'll be free cash flow positive this year. And really excited about the future and what we have in store with new products coming this year.
So last year was your first year, obviously, as a public company since the de-SPAC progress. Just how would you rate last year overall? On a scale of 1 to 10, 10 being it was nothing could have been better, 1 being total train wreck.
Look, I think it was an 8, and we went public. We did a secondary offering. We completed 3 acquisitions. But there are issues as well as we continue to grow. We're fixing those. We have a plan in place to fix those issues. And then I hope that at some point the supply chain does normalize and the macro climate does normalize. Very concerned with what's going on in the Ukraine and feel horrible for the people there and what they're going through right now. But look, we have a business that has a ton of demand on a global basis, and we will continue to execute against that demand as we move forward.
Can you update us on the center stage product and where that's at right now? Centerfold. Sorry, I'm used to center stage is a thing we use at Benzinga, so that's what I'm used to hearing all day.
Yeah, look, the creator demand for Centerfold has been phenomenal. We expedited or accelerated the launch of it based on demand from creators and them wanting another platform. So we ended up buying a company in October called Dream. We launched that product really 6 weeks after we bought it. We're in beta phase right now. We are looking to move to a real launch coming up in the next period of time, but the demand has been phenomenal, and I think our thesis has really been proven out so far that even with a handful of creators on the platform since launch, our traffic to Centerfold is already surpassing that of our high volume Playboy.com traffic. And so when we think about what Centerfold could be long term as that flywheel effect, that top of the funnel, and especially when you think about what's happened to other consumer product companies with the changes to iOS, the privacy changes and performance marketing, we have our own built-in base with Centerfold. And so I believe that long term gives us a real competitive advantage.
Can you give us some color on the current licensing pipeline? Any big deals that you recently got, or how robust is that right now?
Yeah, we signed 10 new deals in 2021. Obviously, COVID has had an impact not only on our internal operations, but on our partners as well, with supply chain and other issues. The business did grow in 21, and I think there's a ton of opportunities on a global basis as we get back on the road. Yesterday was a great day here. It was our first day back in the office in 2 years. I got to be honest, I never thought, my wife thought, but I never thought when we closed down in March of 20 now, that I thought we were going to be gone for 2 weeks. Never thought it would be 2 years later. But I know the team here is looking forward to getting back on the road, meeting with our partners and working on some of the new deals that we have in the pipeline.
So Ben, you mentioned becoming cash flow positive. Are there any plans to use some of the cash coming in, or just try to raise that cash on the balance sheet?
Well, look, we are using the cash right now. So even being cash flow positive, we put a ton of money back into the company, really into the infrastructure of the business last year. Having bought 4 companies over the last 2 years, we're focused on bringing those all together, realizing the synergies and improving our margins at the company. And then look, I spent 25 years in private equity. We're opportunistic. We don't have any plans for M&A in 2022. This year, we have 2 clear priorities, which really comes down to establishing the foundation this year, putting the right systems and processes in place internally, bringing in the right people. But of course, if there is an unbelievable opportunity, as me being one of I think the single largest individual shareholder, we will do things that are opportunistic and create shareholder value over a period of time.
So no plans to any more acquisitions, but if something happens to pop up at an amazing deal, you always have your eyes open.
We always have our eyes open, but we're staying very focused this year. And I would tell you, we're not actively looking for M&A opportunities like we have in the past. We're very focused on our operations. We have all of the assets that we need right now to be very successful. And so we want to stay focused on that and making sure that we don't complicate our lives further with other acquisitions right now.
Would you say the Centerfold continued launch of that and making sure that that's working and growing, is that priority number 1?
Well, we have two priorities, as we said. I'm lucky that we've been able to bring in Ashley Kechter, who joined us from Gap, and before that spent 7 years at Restoration Hardware, really helping build that business as their chief merchandising officer to the $2.5 billion of revenue. So she is now running our consumer products business. I am focused on the digital side and making sure that we enhance our team there as well. But Centerfold is obviously a huge priority for us in making that successful. And we're lucky that, the demand from creators has just been unbelievable. We're approaching 1,000 verified creators on the platform. We'll start to turn on the revenue monetization here shortly. And then we have a wait list for creators that is multiples of what we have on the platform today.
And then, Ben, I just want to ask you about the documentary that's out, the Secrets of Playboy documentary. I think you've commented, the company has commented in support of some of the claims being made. I'm just wondering if you find it's difficult to change the broad-based perception of like the Playboy today. Believe the quote I read was the Playboy today is not the Playboy of 40, 50 years ago. And while that may be true, do you find it's difficult to like change the perception?
I don't. I think there's some great things in the company's past dealing with personal freedoms that we have leaned into today. If you look at our audience today specifically at Playboy.com, over 50% of our audience today are women. If you look at our employee base, over 80% of our employees are women. We've grown from 130 employees to 1,100 employees. And so I think that speaks to it. And then when you look at the average age of our audience too, over 70% of our audience today is under the age of 34. This is a brand that has really resonated with Gen Z. And so, a great example of that is our partnership with PacSun. That's a business that's grown from basically zero a few years ago to over $100 million of sales. And that's really streetwear at the end of the day. And so I don't see that issue at all. I think our audience continues to go young. And it's a brand that I think, again, I've talked about this over the past few years. And one of the reasons I took this job was this brand is priceless. You could spend billions and billions of dollars today trying to recreate what we have on a global basis, and you wouldn't be able to do it.
And I know it's only been a relatively short amount of time, but have you seen any negative impacts of the documentary on the business at all?
We have not. We stand by our statement and we support the women coming forward and telling their stories, but we have not seen any negative impact to the company itself.
Awesome. A few questions here from my chat I want to hit on before I let you run here. Sure. As a non-operator of a media brand, are you planning on bringing in an experienced CEO to set up governance from Sadat? That's a tough question, Sadat.
Yeah, so we're not a legacy media business at all. Look, I've spent 25 years in private equity. I've been exposed to a ton of businesses. I'm surrounded by a great team, and I think if part of my job is succession planning, making sure that we have the right team on the court that can win the championship. And so when you look at it, I think it speaks to Rachel Weber and Ashley Kechter and the rest of the team that we brought in, and we will continue to enhance our skill set. But I believe I am an operator. And I think when you look at the performance of this company, we've grown from 130 to 1,100 people. We've increased revenue from 70 million to 247 million dollars. We're on our way to 350 million dollars this year. I'm thrilled by the team we have, and we'll continue to enhance that team.
And I'm sorry, just to reiterate, did you say that you'd be free cash flow positive for the year?
We are free cash flow positive in the fourth quarter, and we'll be free cash flow positive in 2022 as well.
Nice. All right, Ben Kohn, the CEO of Playboy. You guys know the ticker, obviously, PLBY. There it is. Up on the
bunny
screen.
too.
You know the logo. You know the brand. You know the stock. You know the CEO, Ben Kohn. Thanks for coming on Benzinga Live today, Ben.
Thank you. Bye-bye.
All right. Good interview, I thought.
Yeah. No, I mean, it's always. I never thought if you would have told 13-year-old Aaron I'd be talking with the CEO of Playboy, he'd be. I think 13-year-old Aaron would have envisioned a different, probably a different. Yeah, I don't know.
I don't know. Anyway, again, a company trying to reposition itself, right? And the quote that I cited, I think was from Ben, where I believe he said that the Playboy of today is just it's a different.
Have you
company.
seen the documentary?
No,
neither have I.
I find it very, very, very difficult to keep up with quote unquote like trendy shows or trendy documentaries. I operate on like a 4-week delay.
Is that a trendy one right now?
I didn't see Squid Game until a month ago. Okay, so I'm on like a month-long or 2-month-long delay on whatever the hot thing is of the moment. I'll get to it in a month. Okay.
I did watch the Carl Icahn.
I'll get to it later.
I did watch the Carl Icahn documentary.
Case in point, I haven't gotten to that yet.
But I only knew about it because of you. So you told me about it, but you hadn't even seen it yet.
I haven't gotten to it yet. I'm telling you, I operate on a delay. There's so much content out there. How am I supposed to get to it all? I'm busy watching Jerome Powell testify in front of Congress. State of the Union.
That guy on the not anymore. That's Powell.
Actually, can I just say, if anyone was watching the beginning of the Jerome Powell stream, it's pretty funny. They were having some technical difficulties right off the bat, and there was a bunch of House or committee members right on the Zoom meeting or whatever it is that they're using for this, and they were like, "Why is it not starting yet? Why are we late?" It's pretty funny.
This guy that's on TV right now.
Yeah.
For a second, I saw like the top of his hat. I thought it was Putin for a second. Oh no,
dude.
No.
Do you just confuse the U.S. House member for Vladimir Putin?
I don't know who that is on the TV right
He's a member of the U.S. House of Representatives.
Let's see. It's Mr. Caton Carter. Carter, maybe?
Gosh, I don't even know, man. What else? All right, 12:11. We're going to have next guest on at 12:30. Logan Silver from OBR Investing. He's a young guy, and he got into trading like as a teenager. So we'll talk to him about that.
Ooh, speaking of trading, does anyone have any trades setting up? Anything they're looking at? I mean, the SPY's up 1.5% right now. Dow is doing well too. Let's check in on the Qs.
Yeah, how are we doing out there? Let's bring on some charts.
Everything's green. Everything's green for the most part.
Really? Let's get to the Qs.
You know what stocks are not green?
Hold on. Wait, you're going too fast for me. Hold on. I just want to look. Qs, green. Let's go to the overall market here.
Qs are lagging.
Wow.
SPY,
everything is...
SPY and Dow right now, which we have not seen.
Wait, ARKK. Wait, look at ARKK. Lagging.
Yeah, that's what I was gonna say. Those stocks are lagging. You look at your Rokus. You look at your Asanas. You look at your Teslas.
Well, Tesla's red. So to be honest, it could just be Tesla because it's such a huge weighting of all their funds.
No. It's all growthy tech.
Zoom.
It's all growthy tech. Is down.
Oh, this is so interesting.
But even something like Google.
I know. I just saw Google was in the red. But
Google's in the red, but you look at Apple up 1.5%, Microsoft. So the stocks that are green right now are companies that are currently making a lot of money, not companies that are set to make a lot of money X amount of years down the road. Anything you put in the Roku, Asana, Upstart.
What? Asana's down?
Yeah, I mean all these growth tech stock names. Like if you've got a bunch of revenue, a bunch of cash flowing in right now, you're green.
Yeah.
Look at Apple. Yeah. Look at Microsoft. What about something like Shopify? I don't know where I would put Shopify in that category.
I do not want to lose sight of this stock, okay? Because I do want to buy it.
Shopify's red, but
I do not want to lose sight of Shopify. I don't have any orders sitting out there. Maybe I should just throw an order out there at like 600. Just say screw it, right? But I don't know. Okay, so Shopify is down. So yeah, value day. I guess it's a value day, but everything. Let's go to the overall market here. Everything is more or less green, except for growth tech. Yeah. Okay.
I kind of think Shopify might be setting up for a trade here.
Let's see.
I might take something on it. The problem is the options are just so expensive.
So here's what we've been saying, right? The convenient thing about last Thursday is it gives everybody an out. There is a clean out across the board in everything, and it's the low of Thursday. So in Shopify's case, it's 585. Now that's
$4 away.
That's
no.
Never mind. That's $80 away right now. $75 away. So it's a while. Shopify, maybe you got to be.
Here's my thing: I think Shopify is getting unfairly grouped with the rest of these growthy tech, Cathie Wood-esque names. When Shopify should be grouped more with your Amazons and app. I mean, Shopify makes money.
No, because what's the? It's an $84 billion company.
But the PE's below 30. Like that doesn't scream.
No, the trailing PE, but the forward PE is ridiculous. No, the price to sales of 18, market cap of 84 billion. It's not really comparable to.
Okay. Amazon's price to sales is what, like 3 right now?
Probably.
I think maybe even less than that.
Let's go.
3.5.
It's 3.3, and it's got a forward PE of 52.
All right, you're right.
Again, you can't. It's hard to.
What's Apple's price to sales?
Probably, if I had to guess, I would say it's in the high 20s price to sales.
Yeah.
If I had to guess, I would say
somewhere between 3 and 4.
I would say like 4. What is it? It's 7. Wow. Okay. That's more than I would have thought.
So Apple's expensive in that regard.
Well, it's expensive for Apple, but yeah. Wait, I want to address this comment in the chat. I have to scroll to find it though. Give me a second. Christopher, I'm sorry, man, but we're not gonna help you do that.
How much is that? It's like more than $25,000, right?
I honestly don't know, but
that's euros.
If you're looking for for stock picks, and we say the stock is going to go higher, therefore it's going to go higher, you've come to the wrong place, man. And just honestly, and like not trying to shit on you or whatever, but just that mindset of I need to make up this loss is probably going to get you into a bigger hole, to be honest. So we're not going to give you a pick that will help you make up the 25,000 euro loss. Wait, no, that's pound. Is that pound? That's the pound, right?
Yeah, I have no clue.
That's the pound.
Is it really?
Yeah.
Because then I think it's even more.
I don't know. I don't know. Okay. There's an old saying, tips are for waiters. You don't really give tips here. So, sorry. And no, I'm not in Palantir. Whatever short-term swings I had, I got out of them on Wednesday or Thursday. Well, whatever, one of those days. I think it was Thursday.
But let's say hypothetically.
Okay.
You had to.
All right.
What would you do? Like an honest thing. I'm not.
Okay.
I'm just
okay.
curious
Okay.
what you,
Okay.
Spencer, would do.
Okay. If I was in that position,
hypothetically,
and I was like, "Damn, I need to make up a huge loss here, and I want to do it quickly." What would I do? Honestly, oh God, I don't even want to say it, man. I don't even want to say it. Okay, because I have an idea, but it's so freaking stupid.
What, buy Tesla calls?
No. It I don't even want to say it, but yeah, I'm not gonna. Okay, if I was being an idiot, if I wanted to be stupid,
if you wanted to be,
if I wanted to be stupid, I would consider buying like RSX. If I wanted to be totally stupid,
you could just buying it, buying calls, yeah.
If I wanted to be just dumb and say I'm probably throwing my money away, but there's like a 1% chance that I'm not. But don't do that. Please don't do that. Please, for the love of...
The only thing I'll say on that is I honestly think it'd be dumber.
Our camera's having a seizure, but I like it.
I honestly think it'd be dumber right now to go out and short RSX than it would be to buy it.
Don't short it. Don't short it, please.
Yeah, you're going to short something that's down already 65% in the last month?
You're going to short something at an all-time low?
Yeah, no thank you. Well,
I don't know.
I don't know. That probably works out a lot of time, actually.
Maybe it does. You're right. All right, bad logic.
Buying something at
bad. You're right. Buying it at a high is the equivalent of... Yeah, little Bill, I shouldn't have said that. You're right. I'm sorry. Shelly, what can I say? Don't do that. For the love of all things that are holy, don't do that. Please, please, ready? You guys ready for this?
Just turn on CNBC and do whatever Jim Cramer says.
You guys ready for this? Boom. Please remember that all the information from our show is meant to be used as informational purposes, not for investing or trading advice. Holy cow. Do not come knocking on my door if you do that and you lose money. Please.
Speaking of losing money.
I cannot be more clear about this. Speaking of losing money, what did you lose money on today?
Yesterday I bought some Lockheed Martin puts while we were on with David Green because he was talking about how it just got overextended. Stocks can't go up that much in a short period of time.
Yeah.
And I like bought them and didn't even look at them. And yesterday in the afternoon, the contracts were down like 50%. And I was like, why'd I listen to David Green? And
then you wake up.
I wake up and they were up 350%.
Nice.
I was like, oh, maybe this David Green guy knows what he's talking about. He's been doing it longer than me.
That's true. Okay. We have a few things to get to before we bring on.
Also, Lockheed. Oh, we already talked about Lockheed's intraday movement.
Yeah, a little bit.
Yeah.
Wait, can I read you?
Solar giving up all its gains.
Can I read you the stat? This is off topic, but it's been in our doc for like all week. I just want to mention it real quick. New York Times, right? Public company, NYT. They bought Wordle.
Yep.
Right. This is from Dylan Byers, who's a media reporter. He said, sources with access to the New York Times internal traffic measurement system told me visits to the New York Times Wordle page in the first 24 hours were roughly equivalent to the total monthly audience for the New York Times website itself.
So 24 hours.
24 hours of owning Wordle brought them as many eyeballs as the New York Times website gets in a month. Now, it's not apples to apples because the New York Times website is behind a paywall. So, they're charging for those eyeballs. So they willingly limit themselves. If they want to get more eyeballs, they would get rid of the paywall. But
so what New York Times has done, I don't know if you've seen.
But is that pretty wild, though?
Yeah, on the Wordle page, it's like advertising its other games. The New York Times crossword, the Daily Mini, the Spelling Bee, all this to try to encourage. And I could see a lot of people that maybe would not have gotten in that New York Times game ecosystem interested in it because of Wordle. But at the end of the day, if I just hop on the Wordle site and I play Wordle for 5 minutes and then I'm off, how valuable is that to New York Times?
It's not. It's kind of the point. Tiny Pie. Wait, Jason Raznick is in office today. We can definitely, it's not going to do anything now, but we can convey the feedback that we should have bought Wordle. Let it be known, everyone, we should have bought Wordle. Tiny Pie Media says that in the chat. Anyway, that stat's been sitting in our doc all week, so I just wanted to mention that so I can clear it out. I thought it was pretty amazing.
Yesterday, it's so funny. I don't know. I guess we all live the same lives. I don't know. But yesterday, I guessed on the thing. Mm-hmm. Ruble as one of my.
I guess that.
I know, and then I saw a tweet about it, and the tweet had like 100,000 likes. The tweet was like, I really thought like Wordle was gonna make the thing ruble today, the day like the ruble was crashing, and I guessed it too. And apparently everyone does, because I thought like it was like something that I did that was whatever, like unique. And no, turns out hundreds of thousands of people.
Wait, Sadat, I have sources that tell me that Jason Raznick is interested in resuming his media persona again. I don't have a timeline on that, but I have a source, and my source is Jason Raznick, and he said that he wants to come back on the show. So stay tuned. And the reason I'm telling you now is so now it's out there in the ether because he said it, and I want to hold him accountable. So it's out there now. Now you know what I know. So
let's see. It does look like some of those growth tech names we were talking about, like ARKK, has had a pretty strong last 5-10 minutes.
Yes, Jason is doing the camera right now. Every month, our star writer Chris Cacci writes an article where he runs through the most searched tickers on Benzinga for the month. And I think it's a fun little exercise to do, and I think it speaks volumes about sentiment among our readership and our user base, right? So can we go through that right now?
Yeah, let's do it.
Okay. Number one, most search ticker on Benzinga.com and Benzinga. Actually, this is just Benzinga Pro, just our paid platform. Most search ticker for the month of February, SPY.
Our most popular ticker?
That is our most searched ticker. Can you ever remember... Hey, Shubs is here. Shubs, can you ever remember the SPY being like the most searched ticker? Never.
What do they do? Make like spyware?
Yep, that's what they do. Is that a joke?
Yeah.
Okay. I can never tell when you're like half paying attention and therefore ask a serious question.
I'm paying attention.
All right.
I was just checking the market.
Okay. No, that's cool. So SPY, most searched ticker on Benzinga Pro last month. I can never remember that ever being the case before. It's always some trendy stock. I think that's very notable in and of itself. Number two, most searched ticker. Does anyone want to guess? This is a stock. This is a trendy stock. It's always trending.
Tesla.
Yes, Tesla was number 2, the most searched ticker on Benzinga Pro for the month of February. Number 3, you want to keep going here?
Ford.
No, mega cap or
Nvidia.
large. Damn, he's good. Nvidia.
It's almost like I know that I'm inside the mind of a retail investor.
It's almost is it? Okay, that was number 3. Number 4, mega cap tech.
Apple.
Nope.
Microsoft.
There's only so many of them. Apple's 5.
Okay, so there's one in between Nvidia and Apple.
Yep.
It's not Microsoft.
Amazon is 7. I'm going to tell you that now, so it's not Amazon.
Okay. Netflix.
Netflix is not on the top 10.
Really?
Yep. Yes,
Facebook.
yes.
Meta.
Christian Gallagher.
Meta.
Christian Gallagher.
AMD.
No. It was Facebook. Sorry, the chat.
Meta. Okay.
It was Meta. Apple was 5. AMD is 6.
You said Amazon 7.
Amazon is 7. That leaves us with 3 tickers left.
Okay.
8, 9, and 10. One of them is an ETF.
Okay.
Number 9 is an ETF. 2 of them are like trendy growth stock.
Q, one of them?
The Q's number 9.
Okay.
So 8 and 10. And they're both like beaten down growth stocks that are always trendy.
Beaten down growth stocks.
Yeah.
Roku?
No. Wait, let me get the chat up here. Let's see what we got. No ARKK.
No,
sorry.
he said one was a fund. So
Yep.
the two remaining are not funds. Rules out ARKK.
Yep.
Gallagher's got it. PayPal and Square.
Nope. No PayPal. No Square. But Square is not that far off.
Okay.
I'll say.
Square's
and now there's PayPal. They're
okay, so it's not Square, but not QS, QuantumScape.
Not SoFi. No, that's funny. No.
Okay.
No.
I thought you said not far off.
Someone guess Affirm yet?
The ticker was flipped.
It's not Palantir. What'd you say, Ron?
Affirm.
Affirm is number 10.
Ooh.
Can you believe it? Affirm is number 10. The 10th most searched stock on Benzinga Pro last month. Affirm. We're missing one more.
You said another tech stock. Another growth tech.
We're missing number 8. It's a growth. Well,
Palantir. I'm just guessing in the chat. What I see now. SoFi. Palantir.
Tech is a loose term.
Okay. Lululemon.
Brent, 7 was
Amazon.
Sorry. Tech is a loose term. I haven't seen. Okay, I'm gonna give you guys a big hint. This company was in the news like a few weeks ago. Yep, there it is.
Peloton.
Yeah, that's tech. You can say
Yep.
You can say it's tech.
Yep.
But it's not. Yeah.
Anyway, Peloton, your 8th most searched ticker on the platform last month. So to recap, going from 1 to 10, your 10 most searched stocks or tickers on Benzinga Pro: SPY, Tesla, Nvidia, Meta. I have to scroll. Sorry. Apple, AMD, Amazon, Peloton, the Qs, and Affirm rounds out the list. Shout out to Chris Kaichi for doing the work and going through the numbers on that.
See, to me, it's not that surprising seeing SPY at the top of the list because it's just most searched tickers. And I'd imagine that if someone wants to get a quick gauge of the market, searching SPY is the easiest way to do that.
I'm telling you, though, I look in our internal dashboard every day, and the most searched ticker is almost always the high-flying stocks of the day, right? There's always a stock up 40%, right? That along with whatever, like, mega cap stock is up the most, those are always at the top. SPY is typically up there, but to have SPY be number 1 for the month, again, I don't think I've seen that before, frankly. So to me, that says that the Benzinga user base is concerned about the overall market, is what that tells me. Anyway, thought that was a fun exercise.
Can you guess how much a $25 Nordstrom's call is up today from yesterday's close?
Oh, God. Can I pull up the chart? Can I cheat for a second?
Yeah.
Is that cheating? Oh, man, my charts. Uh-oh. My charts just crashed on me. Because last I checked, Nordstrom itself was up like 30%. Oh, my gosh. So 38% now? Holy moly.
Yeah, when you said every day there's a stock that's up 40%. I was like, I wonder what that stock is today. It's Nordstrom.
It's gapped into a gap, right? How much is a $25 call up today?
Yeah.
500%?
A $25 call is up more than 1,300% right now. Closed at 15 cents yesterday, now worth $2.18.
Wow. That's wild.
Yeah. Oh my God. The $28 calls.
Wait, we're just to be clear, we're referring to options expired in 2 days. The calls for this Friday is what he's talking about.
The
AKA YOLO calls.
The 28 March 4th expiries closed yesterday worth 4 cents. Today they're worth 88 cents.
Holy
good
shit.
for a $2,100 or 2,100% gain.
What are we even doing here with our lives, everyone?
We should have just YOLO'd Nordstrom.
Why didn't we just YOLO Nordstrom calls yesterday?
Because I didn't know who all was reporting.
We went over it on the show, I think.
Maybe I don't have to close. If Randy were here, he would have told me, hey, let's get into some Nordstrom, and we would have done it, but Randy wasn't here.
Whatever. All right. Let's bring on our next guest here, Logan Silver, a new guest joining the show today. Always fun to have a new guest, some new blood. Logan Silver is from OBR Investing. He's been investing since he was a teenager. So let's find out about how he got started, and we'll give Logan our.
Logan Silver is a really cool name.
Ron, can we give him a special intro? I moved it up there. Logan Silver, what's up, man?
Hello.
Special intro for our new guest. How we doing, man? What's up?
Great. How are you guys doing? Thanks for having me on.
Doing fantastic. Tell us a little bit about how you discovered trading and how old you were.
Absolutely. First of all, I heard you guys YOLO'd some Nordstrom calls. $25.
I wish we
retroactively
Nordstrom calls. Yeah, in my mind, I did.
Yeah, we're up so much.
That's all that matters. That's all that matters.
Yeah.
But yeah, so I actually got started trading when I was a sophomore in high school.
Oh my
gosh. And I was introduced to the Forex market from my brother at the time. And I traded the Forex market for pretty much up until just about 6 months ago when I transferred over to options primarily. But I'm very much a Forex guy, more so than an options guy right now. But I still love the options market very, very much.
I think your brother was just playing a trick on you, man. I think he was just trying to get you to lose money. I don't know.
My brother is actually one of the Instagram guys for Forex education right now.
What's his Instagram?
What does that mean?
Austin Silver FX. He's got close to 100,000.
Okay, yeah.
Oh man,
yeah.
Holy cow! Wait, so
it is possible to make money in Forex. Believe it or not.
So you're a Forex guy. I would love to get your thoughts on what the hell, like the movements in the Forex market right now. Because the thing I've never liked about Forex is that it doesn't move a lot. Like these currency pairs, they don't really. Maybe they do. Maybe my perception is wrong. But like we're arguing about a move of like a couple basis points. It kind of gets at me a little bit, but there's been insane volatility this last week. I would love to get your thoughts on just the price action there.
Yeah, absolutely. And you are correct. Unless you're trading the ruble right now, there's not a lot of movement in the Forex market. But that's why we trade with a lot of leverage. Oh. And as you'll see, a lot of professional traders don't usually use that much leverage. It's like 1 to 50. And you'll see a lot of newer traders use anything from 1 to 100 all the way up to 1 to 1,000 leverage even.
Can I ask how do you control your risk, man? How do you make sure you don't get blown out?
The same way we do in the options market, actually, just using stop losses, using measured percentages of our accounts. Every single setup that I take, for example, in my Forex trading is 2% of my total account or 1%, depending on the grade of my setup. But the same way I'm measuring my risk in the options market, actually.
Right. But when you're using leverage, though, your position is liable to be much larger than that.
You're correct. There is the chance of slippage. Perhaps price gaps past your stop loss and you get slipped for a little bit more. But that usually, if you are controlling your risk with a reasonable amount of your portfolio, that's not usually a lot of money.
So what do you typically trade?
That's a great question. I trade only the major pairs, so I do not partake in the ruble at all. So the majors being USD CAD, United States dollar, Canadian dollar, GBP, JPY, Great British Pound, Japanese yen. A lot of the JPY pairs move a lot, and I like them. More volatility there, and I do trade better with volatility. So I like the JPY pairs, USD pairs, and Canadian dollar pairs a lot.
What about going over to options? Do you stick with, mostly big stocks? Are you looking at some smaller caps?
Yeah, I mean, I just heard you guys talking about SPY being a great gauge for the market, and we trade a lot of SPY at OBR. So it is a lot of big stocks. I'm not personally using a stock screener to see what's up the most today, I'm looking at big names that everybody's familiar with, looking for patterns that everybody's able to identify in OBR that we teach day in and day out. It's the same thing on the same stocks.
Got it. So you're just checking in on the big, you're looking at the big guys, Apple's, Microsoft's, Nvidia's, Tesla. I mean, any favorites out of the biggest names?
I love trading Boeing. I love trading SPY. I also heard you guys talking about Piton a couple seconds ago. Piton's a very fun stock to trade if you're buying puts, that is. But yeah, that's definitely one of them.
Yeah, and then so what is the option strategy? Mostly buying either long puts or long calls, or do you guys do anything more advanced in terms of, spreads, condors, anything like that?
Yeah, that's a really great question. For myself, it's personally just buying puts and calls, but we do have analysts that specialize in just about everything at OBR. So we have a guy named Clayton, and Clayton only trades longer term stuff. He utilizes spreads. He utilizes more complex option strategies. But yeah, I personally do not.
Do you have like a list of like typically these are the stocks that you focus on and you don't stray too far from that? And if
sure,
so, how
yeah,
big?
I absolutely have a watch list.
How big is that list?
It's actually quite large. I'm looking at a lot of tech stocks, SPY, QQQ, obviously. Nvidia, I do trade a lot. Tesla, TSM, AMD, Boeing, like I said. Alibaba is a fun stock to trade sometimes. We do dabble in the meme stocks, AMC, GME, sometimes, not a whole lot. DWAC has been a fun one to trade recently with the increased volatility when, Trump tweets or something, when some news gets out, when the rally is formed. Lucid is a fun stock, Microsoft, Moderna.
Holy cow, I didn't even know DWAC had got all the way up to 100.
Yeah, it's crazy. Wait, Logan, have you ever blown out an account?
In options, I have not. In Forex, yes.
Yeah, tell us about that, because I think I've always thought that you learn more from your losses than your big losses than you do from your big wins.
I completely agree with that. I actually, the last time I blew an account was my first year in trading, so thankfully it's not happened in quite a bit of time. But I remember very, very vividly I was trying to sell gold, and gold just kept on rallying. And because of that leverage and my lack of knowledge about risk management at the time, I was just continually adding to my position. And I blew the entire account in like one trade. This was very, very early on. And I remember I punched my wall out of complete anger and took a step back for about a month. And after that, I came back into the market with a lot more knowledge. I had a new mentor actually in that time period who taught me a lot about risk management, which helped me move into a proprietary trading firm shortly after and do fairly well there because of risk management. I always am preaching risk management. So that was the main lesson I learned from my first loss is proper sizing.
Just to understand this straight, your brother introduced you to Forex and then did not tell you about risk management.
We were both new at the time.
Okay. That's interesting. All right. So, talk about it like a recent trade that you've made and walk us through the setup there.
Sure. I was actually just short Piton actually from yesterday. We took profits on it this morning. I'm just going to quickly pull it up on my chart.
Yeah, if you want, you can also share. If you want to share your chart, you can do that here. You can just share that share button on screen, and we can bring it up and take a look, and you can walk us through what you saw, how you got in, how you got out, if you're out. That is, I would just say as a general PSA, please understand the use of leverage, and it is a high risk strategy. I just wanted to throw that out there just so everyone knows. All right, I see your screen. Let's bring it up there. All right, this is Peloton here.
This is Peloton right here. Yes.
Okay.
So what I saw, and I do utilize some moving averages as well as a trader's dynamic index, a couple of other indicators, but I also do utilize Elliott wave framework primarily in my trading, as well as Fibonacci numbers, things like that. But pretty much what I saw was a standard corrective wave happen in Piton off of this low. And we've had an engulfing candlestick through the 50 EMA, 21 EMA, and 8 EMA. So I actually entered
why do you use all these indicators? Like how did you find them?
How did I find them?
Yeah.
That's a great question. The main reason that I use these indicators, and I don't use them all the time, I have this little thing up here where I can just quickly toggle them off and on. But the reason I do use them is just combining confluences. And to quickly elaborate on what confluences are, it's just things that align with your bias. So That's mainly why I'm utilizing these indicators. If I see we're in a corrective wave, we finished that corrective wave. Now, what else can I find that says, okay, prices may be coming lower, the corrective wave may be over, and we're moving into our next impulse. And that's exactly what we had here with that break through those exponential moving averages. Does that make sense?
Yeah. Why do you use like the thing about moving averages that I've always, and I use a couple of as well, but like it's so subjective, right? Like because I like the 50-day and the 20-day and the 200-day, and those are obviously longer term. But why do you use those moving averages specifically?
Yeah, well, mainly for trend following. So the 8 EMA, which is the yellow here, is what I find to be very, very useful for shorter term time frame trading and trend continuation. Pretty much when we break above the 8 EMA is when I will close the position. And as you can see in this piton trade, once we got through the 8 EMA, besides this little thing right here, which we actually did not close above, we never broke above the 8 EMA. Still have not. So you could still be in this trade. And I know some people that are in OBR still in this trade. The 21 is a good confirmation EMA for me. So I'm looking for engulfing candles just like this one, where the 8 and the 21 are on the candle body and it's crossing downwards. That's a really good confirmation for me for a sell position. And then the 50 is just good because I find that that's really good dynamic support and resistance levels that I can find. And as you can see, it does respect that level quite often. At the end of the day, people and price just respects these moving averages because a lot of different people are looking at them on their screen.
So just to be clear, is this a trade you're in right now, or a trade that you closed?
I was in this trade, and I actually got in. Got out of the trade in this candle right here.
Okay.
Yeah.
So that was you bought puts, or you sold the stock, or what?
Yeah, I bought puts. My expiration was, let me pull it. I think it was March 11th. Could be wrong.
Okay. Do you ever look at the options? Do you look at options flow at all?
I do. I do, and we actually just partnered with a firm called Quant Data, and they're very, very useful.
Okay.
But I actually did get the March 18th puts with my entry. Oh, that's gone now. I can pull it up in my analyst chat.
No, that's all right. So a bearish Peloton trade, and it worked out for you.
Yes.
Yeah, I guess if you all want to drop some tickers in the chat, we can throw them to Logan and see what his thoughts are. See if they're on his list. Do you trade just stocks right now, or do you like dabble? You said you do Forex, but do you dabble in like in crypto or ETF? Or you said you do ETFs too, but do you dabble in like in crypto or anything like that?
Absolutely. Actually, all of my long-term portfolios are in crypto. I'm a huge proponent of crypto. I think that it provides a great opportunity, especially for if you are younger. This is definitely an industry that's going to be around for a very long time. So surprisingly enough, most of my retirement and long-term investing is in cryptocurrency.
Okay. Shelly asked it why you're not using CFDs. CFDs aren't legal in the U.S., Shelly, to my knowledge. So that's probably why. Do you know what CFDs are?
CFDs, yes. So if you were trading, for example, US 30, we can just pull it up.
Are they legal? I thought they weren't legal in the US.
To my understanding, they're not. You just need to have a certain broker. Because I do trade CFDs. So let's hope they're not illegal.
I've never traded a CFD in my life, so I don't even know. I wouldn't even know.
Yeah, I mean, it's just essentially they're traded like a spot market index. So this is what we would like, how we trade QQQ in the options market. This is NAS 100, except it's the CFD for the same index. But yeah, I do dabble in CFDs sometimes.
Since you use leverage, do you trade leverage ETFs at all?
I do not personally. Cool, I do have the same long-term analyst Clayton does dabble in triple leveraged and double leveraged SPY and QQQ, but I personally do not.
Aside from the gold trade, can you tell? I'd be curious to hear from you, like a big loser that you had and a big winner that you had, and have you walk us through what happened.
Yeah. While I'm thinking about the loser, we can go through the winner.
Sure.
So my largest winner to this date actually was on Australian dollar, Japanese yen.
Okay.
And this was back in COVID. So what happened was COVID started breaking out, and this is actually the trade right here. So I was writing this short for, let me see. So yeah, right here. We saw, and this was back when I was pattern trading a lot. I still do utilize patterns quite a bit, but I look at a little bit more things than I used to than just patterns. But we saw this break out same time COVID was happening, and it was a incredibly novice mistake that I made that ended up resulting in what was the largest winner. So we had this breakout of this wedge. I entered my first position here, not expecting this was going to fall as far as it did, obviously, because just the news of COVID was reaching out at this time. And then what happened was I added another position when we broke here. And then I added yet another position on a lower time frame when we broke out of a pattern right here.
So you averaged that. So you rode that thing all the way down?
Not all the way down. I actually got out around here. So I did not catch the last move down, but I saw this wick happen. I looked for the wick fill. It took a couple of days, but after we did get that wick fill, I closed that trade. And I believe it was a 35% return on my portfolio at the time.
Nice. Very nice.
Yes,
I like that your biggest winner was not like, I made 10,000% on this trade and I'm going to do it again, because that shit ain't easy. So
absolutely. Yeah. That's not easy, not realistic.
Yeah.
And while I was adding to this position, what I did was when we got this entry, my stop loss first was here above this last high. When we got this entry, I moved my stop loss for both positions to this high. When we got this entry down here, I moved my stop losses to break even. So I was not really risking as much as you think I would be risking if I was leaving my stop loss where it would be.
Okay, I was going to ask you about your stop management and whether you move them. Do you have a target stop? Is it a percent thing? Is it a dollar value thing?
For options trading, I'm assuming you're referring to.
Oh, well, for anything really.
Yeah. The answer to that question is actually pretty universal. My stop loss is always going to be placed where the pattern that I'm executing on is invalidated. So for this wedge, the time that this trade would be invalid, just using this as an example, would be when we broke back above this high. That's when I would consider this entry right here to be completely invalidated. So that's when my stop loss would be put here. Same thing for this pattern. For another strategy I use, I may put the stop loss above the candle high that I'm entering on, because that's where the trade idea would be invalidated. Wherever the trade idea is invalidated, that's where my stop is.
How far above the high though? I guess to be specific here. Are we talking talking a couple points? Are we talking like 2%, 5%?
Yeah, essentially the high, adjusting for spreads.
Yeah, of course. Oh, okay. You're adjusting for like the bid ask spread is what you're saying.
Yeah, exactly.
Okay. So like the high of the candle, like the ask on the high of the candle, right? Is that what you're saying?
Exactly. So for example, I would set my stop to this high from this candle that we had here, because this was the last touch to this resistance line. And then what I may do is give it a little bit of breathing room, just move it up a tiny bit, but that's where my stop's going to be. I'm not going to move it up too much from there.
Okay. And that's the full stop. That's not like a partial stop. That's just like the whole thing.
That is the full stop. If I see the position starting to go against me, I may scale some of the position out incrementally.
Nice.
But that's the full stop.
Do you ever do, like you said, your entire long-term stuff is in crypto. Would you ever buy any stocks long-term? Do you have any long-term stocks?
Would I? Yes. Am I doing it now? No, but that's purely based on my own position. Just because I have a lot of conviction in crypto right now. So I have some plays that I'm keeping an eye on. But once
which cryptos?
I'm a really big fan of Ethereum. I'm a really big fan of some altcoins that not a lot of people know about, such as Nano. Veet is another one that I'm a really big proponent of.
Never heard of that.
I'm
a mainstream guy. Give me some Bitcoin, Ethereum, and Solana, and I'm good to go. But
those are all great projects. Bitcoin is a maybe, but Ethereum and Solana are great projects.
I don't know anything about it. I own it because I can't afford to not own it at this point, but that's definitely not where my bread is buttered for sure. Though I admit that I need to learn more about it.
Do you guys do a lot of crypto investing on this channel?
Yeah, I mean, we've got like crypto people like at this company that are like huge into crypto. Like the show after this is an NFT show. We got a crypto show every Monday and Friday. We do a lot with crypto. Just those guys know so much more about it than me.
You leave it to them.
Like, yeah. I mean, like I like listen to them and let them guide me and let them be my Sherpa. But yeah, yeah. I mean, I don't like. I still like have to understand like the fundamentals of the project, and if I don't, then a lot of it is just jargon to me. So
that makes sense, and that makes total sense. If you don't have conviction in your idea, you shouldn't really be investing in it anyway, right?
For sure. All right, man. It's been a lot of fun. Do you have just any general lessons you've learned that you want to share? Just with us or just with the audience here, just about what you've learned over the years and mistakes you've made and whatnot.
Sure. And it goes back to the first thing that we actually were mentioning, which is be aware of how much you're risking. Leverage is very dangerous if used incorrectly. So be aware of that. I highly recommend getting around like-minded individuals. That's why I really love OBR, not even just trying to push it because I work there, but because the people there really help make trading a much more fun and, honestly, we perform better when we're collectively talking about ideas, going over trade ideas. So I recommend managing your risk, get amongst other people that are doing what you're doing, and keep watching these smart guys over here because staying up to date is very, very important.
That's it. Logan, a pleasure to chat, man. Thanks for coming on today.
Thank you so much for having me on. It was nice talking to you guys.
All right. It's fun. Get some new blood. I like having new guests on the show.
Yeah, and what I'll say is there are a lot of kind of investing groups, Discords, etc., that have popped up over the past couple years when investing became in vogue.
In vogue,
whatever you want to say. Yeah. But OBR to me is what you want in like an investment community, right? Like real ideas, real strategies, not just everyone's buying Clover Health today. Let's go buy Clover Health.
Yeah, like know the why, right? Understand the why. Don't just follow the leader.
And what I would
That's
say,
dumb.
what I would want to take away from being in like a trading group like that is that you learn things to where you could turn the group off and take the things that you've learned and trade on your own. If you're relying on the group so much for ideas and what to buy, whatever, then it's not that helpful, right? It's like the whole give a man a fish versus teaching a man.
It's so interesting. Like trading groups are not new. They've been around for decades. Like I think with the advent of like AOL until very recently, you guys remember AIM? Remember AOL Instant Messenger?
Yep.
AIM shut down, I think, in like 2017.
That late?
Yes.
Wow.
And I know people that were still on AIM for purposes of that's where their community was, right? So the idea of a trading community, like maybe you like see a group on Discord or wherever, and you think, these are just a bunch of like morons who don't know anything. But like, no, like trading communities aren't a new concept. They've been around since the dawn of the internet.
And some of these guys, like the first iteration of people having like 100,000 followers on Twitter and just putting out stock picks, those guys had like email newsletters back in the day.
Yeah.
In like the .com bubble crash,
exactly.
like they had like newsletters that they would send out, and those were like the pump and dumps back in the day.
It's just the medium is different. Discord is a new platform, right? But it's the same idea. So trading is a very lonely game. Ask any professional trader, they'll tell you, lonely as hell. I recommend finding, whether it's, Benzinga here, like our community at Benzinga Pro is amazing. I want to plug those guys, like the traders in Benzinga Pro in the chat, talking to our news desk, incredible community. But like, find what works for you. You know what I mean? Find what works for you. But it is better to have one than I think not to have one. So, good lesson in just not being. Although I do want to say it's not always good to have people that just agree with you all the time. I prefer to have people disagree with me a lot because it gives me something else to think about. So whatever.
Let's do a quick check back in on the overall market.
And then after that, we'll do a crypto update.
Yeah, we'll do those together.
Okay.
We're still holding on to the gains, but things are just quiet right now. Like I'm used to such drastic movements.
Well, Powell is still going. I thought
he might have just.
No, he's still going.
Oh yeah, he's still going.
I thought it'd be over like a half hour ago or an hour ago. What do I know? So markets are quiet, is what you're saying.
I mean, not quiet overall, but in the last,
few minutes.
Yeah.
Okay. All right, where's my heat map? Let's get a heat map on the screen. Let's do our crypto update brought to you by Voyager. It's been a minute since the map looked like this. Hasn't it? It's been a few days.
Mixed.
Yes, it's been all red or all green. It's probably been a week or so since we've seen the map look like this. A very interesting dichotomy. Let's see. Bitcoin and ETH both in the green, but clearly not with the same juice as they've had for the last couple of days. It's been very interesting to watch the performance of crypto this week because we're seeing a real world use case play out in real time in Russia as they get basically kicked out of the global financial system. That, in theory, would be a great catalyst for crypto. Still waiting for them to come out and say, yeah, we're doing this with crypto or that with crypto, because if that were to happen, if Russia were to say anything about crypto and what they're doing, whatever coin they say would blast. It would blast off. So regardless, Solana is your big winner of the biggest cryptos today, up 3.8%. Biggest loser here on the map today is we got a few that are tied. We got Sheeb and we got Cardano are both down more than 3% as your big losers. Near Protocol hovering around $11. Our old friend Near. As a reminder, the crypto update that we do are brought to you by Voyager. Create an account at Voyager, fund your or open an account, use the code ZING, Z-I-N-G. Fund your account with $100, make a trade, and Voyager will send you $50 US dollars worth of Bitcoin once you open an account with that code ZING. Check it out. Or not, and don't get the Bitcoin. It's up to you. What are we talking about in the chat? I'm catching up now. We're going to have Nick Shaheen on in like 2 minutes, guys. I love when Nick comes on. Nick is the man. Nick runs our options trading school. Or I don't know what we call it now. Trading school, not the trading school, the inner circle.
Yep.
The inner circle. Nick basically is like a mentor to like a couple hundred traders. He's got his own community.
Oh,
I'm
so stupid.
What'd you do?
Earlier there was a lady on here, and I was like, "What is on that lady's forehead?" And I realized it's Ash Wednesday.
Oh man, happy Ash Wednesday.
But hers wasn't like hers wasn't like a, I don't know, it looked like just like a black smudge on her forehead, and then I saw the other guy with the cross. I was like, okay, that makes sense.
I just need to take stock of things real fast, so I'm gonna bring my watch list back up in Benzinga Pro, and just very interesting to see growth sell off today. It was fun while it lasted, I guess. Although maybe this is just a fun little pullback to buy. So let's get this chart up. Forget that. Let's pull up Roku here as sort of your bogey, right? It's down 6% today. Maybe this is just a nice little pullback. I mean, growth has had a nice couple of weeks, a nice week, right?
Yeah, I don't know. Look, there's a lot of uncertainty out there right now. What we are certain of is the Russian invasion. We saw leading up to that a broad-based sell-off, and then on the news, actually markets rebounded. I think as we're kind of navigating this spot we're in, I don't know how in favor like these growthy names are going to be, right? Like even if people are buying out there buying stocks, I think they're going to be buying names like Apple, like more value, even if they're in the tech space, more value tech rather than growth tech.
Yeah. And I get the relationship between bonds too. It's worth paying. We should pay more attention to the bond market, really. The relationship between bonds and stocks is
we've seen kind of a decoupling. I mean, like the 10-year yield today is down and growth is down as well. In the past, we've seen that inverse correlation where growth tech gets hit whenever bond yields go up. But on a day like today, where the overall markets are up, equities in general look strong, bond yields are down, and growth is down. That's interesting to me.
Yeah, here I just saw a comment in the chat about Logan Silver's Twitter. It's in the description, but I'll just put it in the chat real fast. 1 second, I got whoever asked about that. I got you, Thrifty. I got you, man. Whoa, that link is messed up. Give me a second to give you a better link. Hold on. And then I see Nick lurking in the background. We can get Nick on here in just a sec. Oh, you know why, Thrifty? Because there's two R's. That's why. There it is. Cool. All right. It's 1 o'clock. And at 1 o'clock on Wednesdays every week, we bring on Nick Shaheen, a.k.a. Nick the Troublemaker, a.k.a. the leader of the Benzinga Options Inner Circle, whatever we're calling it now. It's got like 3 names as far as I know.
Bottom line is, if you want to be better at options, you want to learn more about options, Nick is your guy.
Nick really is the guy. Nick is the guy that drilled into my head for years. Don't buy, don't buy, don't buy. I try to say that to you, but it doesn't work. Only sell options. Anyway, Nick, what's up, man?
Hey, I'm here.
I know. You did your hair. Looking good.
No, I bought a new computer. I installed it yesterday, and I guess, you move one thing at a time, and then the last thing I forgot was the camera. I was like, I'm turning it on. I was like, where's the camera? That's not working. So I literally yanked it out of the wall and plugged it into the new PC, and it worked.
Nice,
Plug and play.
Nice.
Go
nice.
PC.
There you go.
All right, Nick. What's been dominating the options inner circle these past few days?
I just had a little back and forth. I said troublemaker because a lot of the members are long oil for a while, and I've been saying, on spikes on all-time high on Chevron, if you're looking to invest in Chevron, that's not the right time. I wrote up to invest in Chevron in 2020 when they were paying 8 and 9%. Respectively, the Chevron and Exxon, and they were literally half the price they are right now, less than half. Up here, as an investment, it doesn't make sense. If you're a trader, in and out, kudos. Yeah, the rhetoric, the rhetoric is working. But as an investment, so every time there's a green tick in oil, there's a handful of people among my people comes to me, jab, jab, jab. So. So we were having a little back and forth with that. And
you're not out here trying to call a top in oil or call a top in Chevron, are you?
I'm going to say this confidently, that I am confident you'll be able to buy Chevron cheaper than this year. How about that? Is that a fair statement? So if you're investing in Chevron for the dividend, I think you're making a mistake. That's my opinion. The dividend is less than 4% now. You think that buying a stock at all-time high on global war rhetoric, which should be a unique scenario. Hopefully we won't have another one down the line. I think that's an easy mistake to avoid, potentially. And so what if it runs from here 10%? I would rather miss out on 10% rally in Chevron than be caught holding the bag. This has never been higher. Oil was up here, by the way, in 2013, 2014. Goldman Sachs, Google it, called for $150 oil, and that was the top. Within weeks, 75% drop in oil. Within weeks, look it up. Look at the CL.
How big of a drop?
70%. I mean, if you let me to share my screen, if you want me to share my screen, I'll show you.
Yeah, that'd be great. I can also pull it up, a chart of oil, but yeah, I mean, I agree. I actually was looking to short Chevron a week or two ago on this news when it came all the way up, but it's just continued to move higher. I mean, like you said, I mean, it could go another 10% higher. Maybe at that point, if it does go up,
at some point, you're going to say, I missed it. At some point, you're going to say, you have to be able to say, you know what, I missed this one. So if you want, I'll show you. Can you see my screen? I shared it.
Yep. Let me go ahead and get pulled up. There we go.
Okay. So this is oil, right? So when a stock when a stock, whatever this is, when this chart does this, I want to know what's left of here. Is this an all-time high? Some people told me it was an all-time high on CF and Ford. I said, no, it's not. You got to look back. So they go weekly. Let me turn off all my lines. So this is still not enough. You go to monthly. Okay. So this is from 2008 correction. This is the 2011 when gold crashed. And this is when right here, somewhere in here, Goldman Sachs, among others, came out with papers. It's going to 150. So if let's say from the closing trade that month to the lowest closing, it's 68%. So this was 2016. I don't know what was going on in 2015 and 2016. Somewhere in the middle lies the truth. That's my opinion. So I'm confident that I will be able to buy Chevron after this drop. So, by the way, why is Exxon not an all-time high?
I don't know. So there are some oil and gas companies that make money while the price of oil is rising, and there are some that actually I don't know if they lose money or if they just don't make as much.
Those two companies are identical. Near identical. They're both super committed to the dividends. They're both flush with cash. They're both well run. Management never makes a mistake. So if you want to bet on oil stocks, these are the two massive ones. The FXE, which is an ETF, 44% of it is those two. So
yeah, maybe it's just people see Chevron as the leader over Exxon. I don't know. That's a great question.
Well, Exxon pays more dividends. And Exxon said it would pay down debt instead of buying back shares. I think. Double check that fact. I thought I did. By the way, the S&P is poking at 4399, the ES futures. That's the high from yesterday's spike. If they take that out, that's a catalyst. Now, going into it the first time, they should dip a little bit. So by the way, I'm sharing my screens live right now, and there are some people waiting in the room. So these are them. We have a couple hundred people. I had 240 this morning, and then somebody crashed the system. So they're watching this stuff. So I want to make sure that it's still within. By the way, we traded DWAC today perfectly. The Qs, Lucid, Tesla, everything. So hopefully you guys are having fun too, because these wild markets. Is Powell done speaking?
I believe so. Let me double check.
Yeah. It's not that important. I think they released his statement in the morning. I just shared a video with 3 different setups. So what do you do during times like these? You do it the ABCs. So I just created a new acronym this week. The concept has been out there. I just finally tagged an acronym to it. The ABCs. So what do I do on rallies like this? I use rallies like this to, number 1, buy insurance, add insurance if I need it. That's the A. Add insurance if I need it. If yesterday, when the markets were falling, like, oh my God, I wish I had bought insurance. Okay, you got a reprieve. B, book profits fast. Perfect example. Yesterday, I said, I'm going long SoFi into the earnings. Boom, pops at the open. Book it. Roku was long into the pop. Book it. We locked it. I cannot lose money on Roku right now. I'm long Roku, and I'm super happy about it.
You're long Roku right now?
Yes, and I'm making money with it because as soon as it popped, we went long Roku, and then it rallied. And then I sold aggressive calls into the rally. So I locked my profits. And I'm going to roll the call out. I may roll it down for this week and maybe roll it out. What that means is I paid $1.70 for the call. It was worth $6 yesterday. It's now still worth over $4, but I've already sold and collected money. So my cost by the end of today would be 25 cents maybe for that.
It does look like just on like the intraday chart that Roku's got some legs to run. I mean, we'll keep watching it, but this is one that got beaten down, got as low as about down 7% today, and is now.
So let me tell you how the Roku. We went long somewhere in here on this breakout. So if you didn't know, if you had no headlines, this is normal price action. So the stock went from here to here. Oh, let's just start from this one, from here to here. Giving back half is perfectly normal price action. And if you look left, That's the base from which it broke out. So that was the breakout. So if you caught this rally, you booked profits like we did. Down here, you don't panic out. That is normal. They went back to footing. Boom, boom. Yep, the floor is good. They can come back up. If they take this out, they probably will take that out, and they will probably get to here with a lot of resistance here. So what I'm doing is I'm long March call at 145. Hit this one somewhere here. But
yeah, I just want to clarify because there's someone in the chat saying you sound like Kathy Wood going long Roku. Nick's going long for a short trade. He's going long on a swing trade for 2. He doesn't care what Roku does or how much money they're going to make a year from now.
I went long on a breakout of a prior high. That's it. So I caught the dip on fundamentals. Roku grew its business and they hated it on the earnings report. I caught the dip because the earnings report was super strong, but they disappointed the people by saying this, the backlog of whatever components is going to cause TV to have fewer TVs coming out, which is where apparently Roku makes its money by selling operating systems for the TVs. So fewer TVs out there, fewer watchers, fewer operating system income. So that's how they're justifying it. So my thing is, but it's not obvious in the sales. The sales are growing at an exponential rate. So I bought the dip, made money. So now I'm long the 145 call for 18 days. I shorted calls for last week that died in my favor. So I collected money and that's in my pocket. They can't take it away. So my cost went from 170 to not 80 cents. Today I can sell next week's call for $1.50. So now I got paid to own that call, which is still worth $400 or $500.
Right.
So
and my point was that unlike Kathy Wood, you're trading this, you're in and out, whereas she's buying for 5+ years or whatever down the road.
Right. So in fact, if you know me for a while, I was the anti-Roku guy because for 17 years they've been in business. They were losing money. Finally, they started making money because now the environment, because of Netflix, everybody's streaming. So now that's their playground. They were early. So kudos to them for being so visionaries. But I don't know I don't know who pays them what, but now I understand. Apparently they do sell the back end. I had no idea. So I learned.
Yeah, I mean,
it's a lot of B2B. Right?
All the major producers of like the actual hardware of TVs, whether it's Panasonic, Sony, whatever, they partnered with Roku to get. Because in the past you had to buy the Roku stick to have the software. Now you buy it directly within a smart TV. So, but yeah, I mean, I'm looking at this. You have a daily pulled up right now. I'm looking at like a 5-minute chart.
This is a weekly. I was going to make the same point, by the way, that the technicals are agnostic. So I just showed you that other chart was, I think, a 5-minute chart or maybe 10-minute chart. This is a weekly chart. So that goes back to 2018. Same concept. So the stock rallied and now it's back into testing a footing, the base area. So if you're long Roku and you panicked out here, you need to join Nick's group because that's not the place to leave it. It's falling into a very strong base that is lower than the pandemic. It fell below the pandemic low when the world was shut down. We had nothing going on in the pandemic. Again, nuclear option. You get out. It didn't make sense. That's the 2019 high. Same with Netflix. Netflix fell below the 2018 high. So that was a catchable knife and it played out well. So you have to use some common sense. We are hostage to headlines. Use your common sense. I'm allergic to headlines. They literally make my skin crawl. And so I don't watch them. Like everybody's like, what did Biden say yesterday? It's like, I didn't even watch it. I'll read what he said and make my own opinion, but it's not going to change my mind as to what a bargain was Roku when it fell on the fact that the report was bad. It is ridiculous how they okay, so you want a perfect reason why you shouldn't watch any of these headlines? Did you read the ADP report today?
Nope.
No,
okay.
No.
Jobs report.
No, I was live when the number came out, and
my god,
I hate that number. It's my least favorite number of all. I think.
Oh my god, I mean, where is it? I had a
God,
hate that. I can't find it.
I hate that number.
So you should look at it. Okay, so I'm looking at the report, and it came out like 400, whatever the number was, positive 400,000 new jobs, and then I clicked on the link. it said last was 509. I was like, wait, last was minus 300,000. No, they revised last month.
That's how they get you, Nick.
They revised. They get me. They should be freaking fired and never be allowed to be do another report ever again.
Last month it was
minus 350,000.
I know. I agree with you.
Last month was such a surprise because there was a huge discrepancy between ADP's numbers and what the actual numbers were.
I'm not talking about that. I'm talking the discrepancy between ADP itself.
Right.
No.
Okay.
It's not. They're not the only ones, though. They're not the only ones. It's
no. But my point is, they're all like this. Why are you watching them? Who's waiting for this report and acting on it? Is Powell acting on this garbage report?
Computers are the answer to that question. Computers are waiting on it.
But I'm saying from a fundamental basis, who's acting on this information? Like, is Powell looking, oh my God, we lost 300,000. We better hold off on the rate hike. And then the next month he comes out like, holy crap. No, we had 1 million more jobs than 800,000 more jobs than we thought we did. Who's acting on this information?
We did just get a leg up. Did we pass through that number or that level in the SPY that
So now if you're active in the SPY, I did the plan for the SPY this morning. This was my plan for my people. This is a 30-second chart. So I shared this on several periods of time. So I said, you buy the dip into any of these.
We just lose Nick.
We lose Nick.
No. Wait, Rohan, fix it.
What?
No,
never mind.
No, all right, you're back. Sorry.
Okay. Rohan. Check it out.
We're good. Look
how accurate these guys are, right? So the breakout was this. It played out, and then it went back to base. If you panicked at base, you made a mistake. You need to join my group. Then it does this. And now they broke out from here. Guess what? They might come back to test first 438 plus or minus 20 cents. And then second, anything below 438.2 is a buyable dip on the assumption that they are testing for footing. So they will do something like this. So let's say this is a head and shoulders. You see it? Let's say they do this.
Yeah.
Okay. And then somewhere here, you can get long. And then they'll try to claw their way back up to here. So if you follow this logic all day, the trades are available. And that's what I'm doing here for everybody, actually, in my group. And I usually get between 220 and 260 all day, every day in here, trying to catch moves like this. The Qs was easy. This morning, I did an inverse head and shoulders. Check it out. Look. This was published this morning. I've got proof. I've got 200 people witnesses, and I've shared it. Look at it. Target. If you got long here, you're not listening to Nick. So my people got long here. They probably booked here or here. So now if it falls back to here, you can get long for an intraday opportunity. This is a 1-minute chart, nothing fancy.
Yep.
So look at it. I drew this arrow earlier, almost dead on. So luckily, machines are in charge, and that makes them.
Oh yes.
So
very lucky for us.
How if you're looking at the Qs or looking at SPY right now, and you can see some strength. Powell is speaking. We're looking good in the afternoon. What would sign for you? That's a reversal to you. That top. I was going to ask, what's the sign for you that we're going to reverse back to the downside?
So you call it a reversal. I'm just calling it price action.
Okay.
So right here, I see a head and shoulders. If they take a lower low, they're gonna go to here. My guess. You buy the dip to swing it back up. If you're an active trader. Now, not everybody can do this. I can't do this because I'm doing this for everybody else. So I just messed mine up, by the way. Right here, being on the show, I needed to book my profit, and I'm not there. Sorry. So, and it expires today. But here's the slower setup. I shared it earlier. This is the small caps RUT. I did a whole write-up with it, and let me see if I remember the words. I said the RUT has a resistance from today and yesterday's highs, and I gave 2 values. But the resistance can become a catalyst if they take them out. It looks like they took one out, and they're trying to take the second out. But here's the note that is tradable for a slower trader. The bears will fight for this. And the note is, if you can take both out, then you may have an opportunity to run 100 points. This is the RUT, so IWM would be the equivalent. And then the target would be here with a lot of resistance levels, here, here. So, and also you have to recognize there's a note here. Overall, the bears are still in charge. So look, they're selling rallies overall. So you have to respect that. That's why the bears will fight for this hard. But that's available. So if you're saying you want to swing trade the opportunity into Friday, that's a guide. So if we close, this is 1 hour chart. If we close above this level here, 2060 to round, it looks good. They'll do this. They'll fail here. Why here? Because that's what they failed. That's where they failed before. And they'll come back and take it out. They'll fail here. Very important. I'm telling you where it's going to be important if that path were to be followed. So plan your day like this. Plan your week like this. Have a morning chat saying, hey, this is what happens today. This is what my plan is today. And then I just shared a video with 3 different setups. I said, I can't trust anything, so I don't want to engage more risk. But there are 3 setups that I kind of like: the FXE, MJ, and PEN, for 3 separate different reasons. The FXE, that's basically the euro versus the dollar on a weekly basis. Weekly, that's monthly. It looks like it's bottoming into support. Powell can change that with his words. If he's loose with the rates, then this should bounce. If he's tight, saying, oh, half point or whatever, this will suffer more, fall to here. Luckily, it's only like $1.40 to participate in an April call at the money, 103. The opportunity is to get a run to 108 with a lot of resistances in the way, but that's the opportunity. And how do I get there? This is a harmonic pattern. I'm not an expert in harmonics. This is from harmonictrader.com. Scott Carney is the guy. Thanks, Scott, for lending me this tool. Then you have to look at internal strength, relative strength index. So see how I blended some fundamentals, but I don't do anything without looking at the charts. And if you're an active trader, admit it. Trade the action. If you're a slower trader, admit it. Trade the swings. Roku was a slow trade. I'm actively managing it, but the way to do what I did would be to book your profit at the open whenever you got the big pop. It was a massive $300-400 win. So percent win. Who doesn't book the profits? I think in this environment, the ABCs, you add protection, you book profits sooner than you would later, than you would under normal circumstances. That's a must. And you have to also close your problem children. So if I had a trade like this morning, I was long the XSP and the pop got me back to even from yesterday. Thank you. I got out. Even though it ran after, I did the right thing by getting out, and I will do it again next time.
I'm going to put the link, guys, to, well, there's a few links, but one of them is a link to join Nick's inner circle, basically. And this link also gives you a 25% off discount. I'm going to put that in the chat. So everyone check that out. If you Nick is live for his people every single day. He's live on our show, on every other Wednesday, but he's live for his people basically all day, every day. So there is that link. I'll pin it. It's in the description as well if you're watching on whatever, Twitch or Twitter or whatever. But check that link out. I just put it in the chat. So that's how you get more of Nick.
Nick, you said you checked out the Van Gogh exhibit.
The what? Oh.
Van Gogh?
No. The Van Gogh exhibit? What?
Was that a joke? I thought you posted something in the options inner circle chat on Benzinga Pro about.
That wasn't me.
Wasn't you? Someone else then.
No. I'm not an artsy guy. No. I do appreciate some art, but no. I haven't gotten out of my stinking chair in a while. So I'm plastered here because I see results. Like in the chat room. So this here, what I keep popping up, this is my own doing. A few months ago, I said, I wonder what would happen if I share my screen live. Would they be interested? And suddenly I have, hundreds of people in here. Mm-hmm. And every day people are making like immediate profits because the opportunity for profits because of this stuff. Like what time I drew this when we were here, right? It's pretty representative of what's going on with the price, right? So would you be impressed if by the time I leave, it does exactly what we just drew? It's not magic. It's just what is happening. It's almost self-fulfilling prophecies. So if you can benefit from all of this, it's so much fun to do it with hundreds of people in the room and not one jerk. I promise. So don't trade alone.
All right, okay. I see the comments that the link is broken. Give me 1 second. I'm fixing it. I see it.
I also, Nick, someone asked us to look at Ford. Also, I looked back in the chat. It was because someone in the chat in Options Inner Circle's name is Racer X.
Oh,
since your name is Nick Racer, I thought it was you, but it wasn't you. It was this guy, Racer X.
No, it's not me. Racer X is a character. So yeah, he's a lively character. He contributes.
Everybody contributes. Van Gogh.
I have one of them called Sandman. He's like a hawk. So 3 days ago he comes in. I think I see a 1 minute bearish pattern on the SPY. Really? I jumped in. It's like, oh yeah, I see it too. Let's do it. Boom, boom. We played it in the morning. The day was green after the fact, but we shorted the SPY based on Sandman's eyeballs. So the more Sandmans we get in our chat room, the better. Don't trade alone. That's what Reddit taught us, right? Don't trade alone. I'm not doing, stonks. Look at it. I mean, are you impressed at this guy right there? I mean, it's just normal price action.
Please, someone confirm with me that the link I put in the chat works, because I just pasted it again, and if it doesn't work, then I'm done here. But I mean, I just pasted another link, and how hard can it be to get a link to work properly? So confirm for me, someone, that the link I put in the chat that takes you to the next product works.
So Nick, I know headlines make your skin crawl, and you're allergic. But can we look at Ford's chart real quick? And Ford did have a headline this morning.
Ford.
Oh yeah, what was it?
Just that they are separate.
Nothing important.
Nothing important.
The answer to that question.
They are separating their EV business from its actual business. They're not spinning
that was
it off.
That was last night.
Yeah, but they confirmed it this morning. I don't know. Either way, last night, this morning, the stock's up 6%.
I know why. Because first of all, for the group, I recommended Ford long under $8. It was 7 and change. Same with GE. So
we're about a year away from that now.
Right. No, I understand. But I know that because I have people in the group that love it. And somebody made money with it today. They had like 100 contracts. They paid 6 cents for them. They closed them for 35. So that's a lot of money. Now, here's the thing with Ford. If you don't go to a monthly chart, you chased it at the wrong spot. So I promise you, I must have answered it maybe 30, 40 times. Is it time to go long Ford? No. Even if you miss 10, 20, same with Chevron, same thing. This is an easy mistake to avoid because these people have been stuck there since 1999, and actually 1998. You come here and bail them out. That's not the right thing to do. Now, here's my plan for Ford. I don't like the fundamentals at all, and this is where I was told I'm sounding like Kathy, but that was my own logic. Them switching to EVs is a hideous thing. I think it's going to hit their P&L in a monstrous way. I would not be surprised if they spun it out to a completely different company, because the transition in the P&L is going to be, it should be bad, because the profits now, the gross margins are already bad. Tesla's gross margins are twice as good as Ford and GM. And these guys don't know how to do it profitably. So the Ford Mach-E is not going to attract a Tesla buyer, is not going to attract a GM buyer. And it's just going to take away from, most likely, Ford buyers. So you're taking a would-have-been Ford buyer of something profitable that you know how to do into a Ford buyer of something that you're trying to get going off the ground. I don't think
that's interesting.
Why wouldn't it attract a GM buyer? Isn't that the same thing?
My son is a GM guy, and you couldn't pay him to drive a Ford.
Yeah, people have loyalty to.
I guess I'm not really a car guy, so I don't really.
Yeah, so there might be some, but it's not waves. So in other words, they're more likely cannibalizing. I'll give you the perfect example: Macy's. The Macy's online adventure was bungled because of that. They took their own foot traffic out of a profitable store into an unprofitable sale online. The transition was horrendous, and you saw the results in the chart. The Macy's stock got decimated down to $4.
I think time will tell, because I think 100% in the short term, if the margins are lower for EV vehicles, it's not great. But in the long term, I mean, right now for companies that don't invest in EVs, they might be obsolete in 20 years.
So I don't disagree. That's why I'm saying I like Ford, but not at these levels. I think we might get a chance to get it at 14, under 15. So why take Ford? If Ford is rallying, so is the market. Why take the chance on Ford? So always say, okay, what else can I do with this money? I mean, I like Ford. I want a good American company to do well. But look, these are tough resistance lines. And you take these out, these are even tougher. This gap is not easy. So gaps are attractive because there's a hole in the volume of the stock. There's no hole here. Look at these two lines is where there was the most action in the stock since last May. That's what this orange line means. So this area here has the most interest. So if the stock is rallying, it's going to hit a lot of resistance and fade.
Yeah, interest means just supply, in other words.
It's overhead potential action. So let's say here the buyers are more avid. Say buy, sell, buy, sell. It's going to hit here. They love it. Both of them. Buy, sell, buy, sell, buy, sell, buy, sell. So price action likes to fill gaps. This is a gap. Look, you have a mountain of volume here, a mountain of volume here, and then an interest in the middle where it is. So it's kind of stuck. If they can overcome this, they can get to here, but not much further. If they fall, they can get to here, but not much lower. So why? I wouldn't mind doing an iron condor on it if there is enough premium, but there isn't.
Can we go back to Chevron real quick? Because it does look like Chevron's trying to come back up to its previous highs of the day, which were also previous all-time highs. Where would you be interested? I mean, like if this went up another, I know you threw 10% out there earlier. I mean, is that when you'd be interested in buying some puts on it or shorting Chevron? Or at what point?
If it didn't pay dividends, I would sell a call spread, but it pays dividends and that creates a problem. So a call spread is where it's a bear call spread. You sell a call and you buy a call above it. You collect a premium. If the stock closes below that call you sold at the time of expiration, you won. You don't need it to drop. You just need it not to go through your call spread.
Why is their dividend so problematic?
Because if you're short a call that is close to the money on X dividend day, and I don't know when is X dividend day, you will wake up to a nasty surprise. They will stick you with the position of short the stock, and then you would owe the dividends to somebody because you essentially sold the stock you don't own, but you need to pay somebody the dividends to which they're entitled.
Got it.
So read about it. There might be some nuances there, but it only applies to short calls in the money or near the money. It doesn't have to be in the money.
Really what it comes down to is nothing in life is free, even dividends. So
here's an advice. A lot of people try to do it. You cannot game dividends with options. I promise you. Don't try. Good. You'll get hurt. You cannot game dividends with options.
That's good. Awesome.
So you want the next level up? So the S&P is trying to break out. So if you take the high of day, you're going to have about 50 to 65 cents available if you're a fast trader. So these are 30-second charts. I usually have 4 of these. I have 15 seconds. Boom, there it goes.
Yep. Just broke high a day.
Wow.
So look at my arrow and look at the actual price action. Where's my mic? My flare. Why does Nick have a flare on his desk? I have no idea.
Wait. There was a question before. Hold on. Before I lose it. Oh gosh, it was about the indicator. Oh yeah, the horizontal lines priced by volume. What's that called in TradingView? Q wants to know.
The orange one. Okay, it's called the point of control, POC. It only means that this is the. I'll explain it to you, but I'm serious about these lines. Even the jagged things. Look, boom, boom, those 2 jagged things. So let's go back to that POC. So this line here. So all these bars down here. their volume. They tell you when the actual volume happened on that day, on that day, on that day. It's not very useful information to me. So these bars right here, that's the same information, except they tell me where it has happened. For example, these are just happening here for the first time. There's not much, right? Whereas this bar is super busy, but I don't care if it happened in December or last summer. Yep. It will show up. So people who traded it last summer up here, there are some people who traded it here. That's the same level. Maybe a decade ago, maybe these are all also in there. And this adapts to the vision. So if I zoom out, it just adjusts it. So over time, since this is 2011, this is the most interesting area for the market. Not my opinion. That's what the market is telling you. So let me go to a monthly chart and let's get smart with this. So this is basically 2003 on. Look at all the volume that they just cleared. Look at the size of the volume here. The busiest spot is 106. So 110 to 106 should stay on your radar. What does that mean? Let's say one day Chevron crashes and you're exiting around that area, you're making a mistake. This is a historical area of interest. It's going to find support. So keep that on the way down. So my answer on Chevron is, if you're an investor investing in a company for the dividends, I suggest you look at M or AT&T. M is the same price as Chevron, I believe. Maybe Exxon, I was thinking. No, Chevron.
No, it's the same. Yeah, it's a little cheaper than Chevron right now.
So $150. It's at lows. Company is still a solid company. It's a defensive stock. We are in turbulent times, and it pays about the same dividends as Chevron, 4%, probably more than Chevron. So why on earth would I want to chase this one? Because this one pays me 3.8, but big whoop if it falls back to test the floor. Clearly, there's something other than investment going on here. There's something other than short squeeze. Can you imagine Chevron and a short squeeze? I don't know enough about that stuff. Maybe you into it. And why is it not Exxon?
I don't know how.
Exxon, if you want to trade the Chevron trade, chase Exxon above here on a monthly basis. I mean, on the daily basis. This is 1 day chart. If you take this out, technically, you could get to $100 and some dollars. Technically,
1% of Chevron shares are sold short. That ain't enough to cut it for a short.
Something is happening with Chevron. Maybe somebody knows something, like they have invested in a battery production company or something. Then that would explain it.
I should clarify that 1% data figure is a little bit old, but it's
so here. This is Exxon, also a fine company, a fine investment at the lows. So technically, this breakout happened here. And this should have been the target of it. So being close to this, now this same pattern repeats from here on up, only on a bigger scale. The upside potential will be from here to here, from here to $20, $30. So you would break above $100 if they take this with force. What will get us there? Another 150 oil will keep the trade going. So my job is to tell people that is potentially a mistake. That's it. I'm not saying I shorted oil last week and it worked for a day and a half, for 2 days. Thursday, spiked on the Goldman Sachs 150 call. I bought a put in USO. USO dropped. The put went up 40 or 50%. I sold puts against it, so I locked my profits. The next day, it continued lower, and then the next day after, it popped, and it never looked back. So if somebody didn't stop out, they lost money. But if somebody did what I did, they made money or broke even. So that was fun to do for a couple of days. But I wouldn't fight this. They say don't fight the tape. I don't have to chase it, but I don't have to fight the tape. Here I am talking about it almost half my day. And there's nothing to do here unless you're a trader. If you're an investor going into it, then you know something I don't. And that's a possibility. There's total possibility that somebody knows something about Chevron. Like, I don't know. Are they in?
Yeah, but it's not specific to Chevron. I mean, you look at BTU.
No, it is specific to Chevron. That's an all-time high breakout that is pretty freaking phenomenal. Why isn't Exxon up there too?
Well, can we pull up BTU's chart real quick? Peabody Energy.
BTU? Yep. But
so it's not all time highs, because if you put on monthly candles and you go back far enough, you can see the stock was higher in 2018, but it's highs of the last 3 years.
BTU is a breakout on a monthly chart. If they can close this month above here, don't be short BTU. Technically, it can come to here. But again, it's all under. Why are they all running together? Ask yourself that.
Because energies.
Well, because it's maybe, Nick, you hate to hear this, but it's all tied to the same macro headline right now.
Right. That's my point.
Okay.
The macro headline is World War III. How likely is that to happen? In my opinion, 0. Okay.
So yeah, that's the thing about betting on. Someone said that once, and I like that saying. If you bet on the end of the world, you're only going to be right once.
Right.
You'll be wrong every other time.
That's what I'm saying. I think it won't happen. What's the letdown from that argument? And then the second one is, even if it does happen, we're already here on that headline. What is the likelihood of a bigger headline to get us the whole way to 150 and this one up there? It might happen, but it's a risky trade. It's definitely not an investment. My mom is up in her 90s. If she says, I'm looking to invest in Chevron, if somebody says, yes, it's a good idea, that somebody should lose their license if they're a licensed CFA or something. Because what? No, it's not an obvious investment. It is a trade, and it's a winning trade. But to start an investment at these levels is reckless. There are better things. I would rather be in a stock like Facebook and Zoom that are down at pandemic levels or lower from an investment perspective. A starter position in one of these makes more sense to me. A starter position in Upstart at 75 makes more sense to me. Risky stock, unrisky situation. Chevron, not risky stock, risky situation. I hope that comes across. So Upstart, definitely a wild stock. At 75 was a no-brainer starter position. Chevron, not risky stock, risky position. Makes sense? I have nothing against Chevron or Exxon. They're great companies. I wrote articles about them. They're buyable, but not up here. When I wrote the article, it was literally $40 or whatever it was. It was in the pandemic. I was like, that's a no-brainer right there.
Sorry for in the chat, Spy bought us. Ben was on an hour 40 minutes ago. Just so you can rewind for that. Guys, Nick Shaheen, this is what he does all day. Okay, all day, every day. I put the link to his inner circle or to sign up for it. And to be clear, Nick, your inner circle is an extension. It's an added bonus in Benzinga Pro. Yeah, it's an add-on, right? It's an add-on.
Yes. The Benzinga Pro tool itself is fantastic, and I have it open here. I'm pretty sure. The inner circle is I have my own chat room for my people in there,
right?
So they can chat with me there. And there are some that would want more, and that's what I added these. What you're looking at, I have 21 to 24. It depends. They keep asking for them. I add. So we have Shopify. I helped some people with that this morning. Affirm. ArtK, I updated the potential scenario there. Roku, we talked about. Lucid. So yes, this is bonus on top of the bonus of the inner circle. And I share a trade a day with videos. Yesterday, I shared 2 trades. Today, I shared 3 trades with videos and write-ups. Not that it's a trade alert. I'm showing you how I would set things up. And if you ask me about a ticker, I answer it. So let's say whatever the cost is, I don't know what it is. Break it up over a year and decide, okay, how much is that worth for, hey, Nick, I'm looking to do this trade. What do you think? Or, hey, I'm upside down on this call. What do I do? Sometimes there's stuff to do. Other times it's too late. But we learn. So it's a learning experience. Awesome. And a resource. You come in and, somebody today had a dark pool source that I don't have. So they were contributing. I have people who do gamma. I don't do. They're contributing. Some people watch volumes. I don't do that. They're contributing. I do watch volumes profiles, but not volume size on moves. That's, whatever you do, you have to specialize in it. And by the way, if we get a new high of day, you get to that number I alluded to earlier. So this is doable. Don't short the SPY.
That's the bottom line here. Nick, we'll talk to you again in a couple weeks. As always, again, the link in the link to his inner circle is in the chat. It's pinned, and it's also in the description of the video. Nick, thanks for coming on with us.
Sorry for the. I'm Mediterranean blood that boils real quick.
Yes, I know.
Later. I like it.
All right. I want to talk about Rivian here quickly. Rivian's getting smacked around today. A report from Electric, which is a pretty reliable EV news source, that on the heels of Rivian raising their prices, they're getting a lot of cancellations. Let this be a lesson to everyone, and I'm speaking to myself as much as all of you, that reservations don't mean jack. Reservations mean nothing. In the world of electric vehicles, you get on the reservation list. So what? So what? You can cancel whenever you want. So apparently that's what's happening here today with Rivian. They're getting a lot of cancellations. Rivian, I mean, it's not entirely their fault. They're dealing with increased input costs, so they're having to raise prices, and that's what's happening here. But it goes to show that anytime a company tries to, and it's not just for EVs, it's for anything too. Let's say this applies to any business that is relying on reservations. So space travel, whatever. Reservations don't mean anything until the money has been paid. Okay? That's all that matters, is until money has been paid and the product has been delivered or service, whatever. That's it. Can we let's put to rest the reliance on reservations from here on out. And in a similar vein, I've been meaning to bring this up for a while. We're a few days late on this, but
I don't know if this is true, but apparently Electric Source was a Reddit poll.
No, I saw the Reddit poll in the article, Mango. I don't think that was the only source. Unless I will admit that I read it very quickly. I could be wrong. If that's the case, then come on now. However, I've been meaning to bring up this chart now for a while. This was out in the WSJ last week. They had a pretty good article on, in the world of EV SPACs or former SPACs, right? EV companies that went public via SPAC. The light blue line is the original company revenue projection for 2021. And the dark blue line is their actual projection or their actual number. Okay. So you can see that these companies that are all public, by the way, gave incredibly generous guidance in their going public offerings with respects to revenue, which translates directly from deliveries, obviously. And no one is living up to those expectations. I think we all learned a big lesson from the SPAC movement of late 2020, early 2021, and that was there needs to be some sort of regulatory catch-up here, right? The reason that a lot of companies go through public through SPACs is it's easier for them. It's less strenuous for the company. But the IPO process, for all its flaws, it works in other ways, right? There are good things about it. One of the good things about it is you're not allowed to give forward-looking guidance in your IPO offering. You're not allowed to say things like we're going to have $200 million in revenue when you actually report 50 million, right?
I'm noticing Rivian's not on this list though, because they weren't a SPAC.
This is only for Rivian's too new.
Okay.
They haven't been public long enough yet. And also they weren't I don't think they were a SPAC.
No, they weren't.
Yeah. So anyway, I've been wanting to bring that up for a while. It's been on the dock to look at.
I'm selling my LNG right here.
Now?
Yep.
Okay, go for it. While you do that, let's bring on Jesse Kaylor from Elite Trading. Joins us every Wednesday, normally, when we don't get our signals crossed. Jesse, what's up, man?
Yeah, we have those from time to time, but how are we doing, guys?
It's all good. It's all good. How's your day? How's your week going?
Oh, it's going great. Really been listening to a few of the people out there and what they're saying when the traders out there when this whole week, and really, like I told you guys, the last couple of weeks went to a lot of cash trading with a lot less risk, and pretty much just honoring my system, which is keeping where, go to my levels, have my stop loss, have my target in place. And then really for me, it's been, what's been working is just not really necessarily staring at the charts like I normally do. I've been kind of being a little more relaxed on my plays because I'm putting on less risk, but I'm being more confident in the setup and letting it, they're not happening as fast as they were at one point, the moves that I'm looking for, but still doing pretty good. Had the good trade in Facebook today and Apple. I posted in the chat during when Mitch was in there and had a couple of good trades in there. I was going to go over those and kind of show
let's talk about that.
And where.
Yeah, let's talk about
it. So during the morning session, you could see that they were obviously doing well. I saw this double bottom right here, and I was like, well, maybe this is a good point to take a stab at Facebook if they go above this 204 here where they kept on hitting. And once it broke out, I got in right around 204.80, like 205 or 205-ish, right in there. And I only took it for $1. And I'm just looking for quick $1 plays on pretty much everything. That's what I did on Apple as well. And the way that I set it up was I just looked at that previous low on the 15-minute charts. So let me go to the 15-minute, and you can see where the risk reward comes into play. I think it was like right around there. So yeah, something like this. So I had a little bit more risk on than I wanted, I think, initially, but no, that's why it looked like this right here. And when it broke above this, I had the stop right there below the previous green candle there, take that $1 and get myself out. As of now, it's sitting right above. I think I got out maybe 60 cents less than this where it's sitting now. So at this point, for some traders, this would have been a good trade if they just didn't put a profit target on, and you take this one off. That way, you could just have that stop in place and let it run. On this trade, I would say that might have been a good play just because of how much we've come down on Facebook, and now we're leveling out on an upward move, So this one does have a good chance, I think, to break out to at least 220, 215-ish in the next week or so.
All right.
And then
the other one was Apple, right?
Apple, yeah, right when it broke 165, I took a quick entry looking for $1. I said, hey, it's at 165. It breaks 165. I'm getting in for $1. It broke right here at 165. Got my $1 right around there and got out at 166.
Well, wait, what was it about that at 165 again?
It's the same thing as what happened to Facebook. See this move here where you're getting a bottom action here. You're getting something of a bigger risk low for me. But then when it came and broke out of this, where it was consistently coming down, once it broke out of that, that's when I wanted to enter on the breakout, and then hopefully just capture a little bit of that move.
Okay, nice.
And you have your defined risk, which for me is that previous mark right here where you see the wicks come down, wicks come down, wicks come down. Well, this is going to be where I want to stop out, because if it breaks that, I have a feeling it's going to come back down and look for this 163 low, and I don't want to put my risk down there, because then if you see this changes a lot more red than there is yellow. So you bring this you bring this up here.
Yeah, you don't want to do that.
And then you see that ratio of a 1.24, and that way, if you're a new trader, the reason why you want to do trades like this is typically you want to have at least a 2-to-1 setup, because that way you can lose twice to every victory. But sometimes you got to have, if you're not putting on a lot of risk, you can tighten it up a little bit on your ratio for profit loss targets. But other than that, I had to play on SoFi. I am still in this, but I am I'm like break even. I think my cost basis is 1186. And
yeah, SoFi's given up a lot of its gains today. Almost
shocker.
Almost was $13
when
it opened this morning.
What a dog.
But I set I set a trade here at 11. I think I have 1148 as a stop, and then I have the target of 1247. Or no, sorry, 1227 is what I posted, and that would be right around there. So just a very minimal loss if I'm not right, and if I'm right, very minimal gain. 20-30 cents on $11 stock. Some people are like, man, I think someone in the chat said, I don't wake up for 20 cents But you buy,
dude. Hey,
buy 1,000 shares and you trade that 7 times in a week. You're making some money.
Yeah, there's no such thing as too small of a win. You know what I mean? I mean, tell that to the high freaks out there that make trades to make a quarter penny. You know what I mean? And do that 10,000 times a day. So there's no such thing as too small a win. So I like this mindset, Jesse. So, like as you said off the top, you really haven't taken a lot. You've taken 3 trades today. You said, right?
Yeah, and I'm done.
And you're done. How do you know you're done?
I had 2 winners, and I got 1 that's open. That where if I lose, it's going to be high. I'm still going to end in profit for the day, and if I win, then it's going to be a good profit day. And my portfolio, I'm up 1% in my trading portfolio today. So that's, if I can do 1%, 30 to 60 trading days a year, then I'm doing okay, as long as my loss is 0.5%.
That's it, man.
So it's just all about. I really think about compound interest a lot, and I think about the fact of how much your money can be worth in 3 years, 5 years, and a lot of times people get caught up in wanting to catch a big move, but really you can have a lot more moves you can have a lot more progress by just looking and targeting small, tiny percentages, fractions of the alpha, not all the alpha, just little bits. Yeah. And it all will add up, because eventually your 1% of 1,000 turns into 1% of 10,000, 100,000, a million,
100%.
Then you're trading like 100%. Triple D, and you got to get 3 cents, and you're making your day.
I love it. I love it. Yeah, let's not. You don't got to hold out for that 20% gainer on No, come on now. If you want to do this, make it repeatable. Nothing wrong with a 1% win, 2% win. Some of my favorite trades were like I eked out a 1% or 2% or 3% gain. I was like pretty happy with myself. So, yeah, I love it. And even though you said things are a little bit slower to develop, so you're not pressing. You're just sort of chilling.
And I've literally been setting like this SoFi play. So it was up here in the pre-market where when I looked at it, it was like $13, and I said, okay, well, if it gives me a 75% pullback, I want in. Well, look at the 75% pullback from here to here is right here, right? 1186.
Yes, sorry.
That's where I put my target to buy at 850 this morning, and I put, okay, if it comes back down to 1186, I have a stop out right here at 1115. I'm doing a 75% or 75% loss, trying to get a 75-cent gain. When I initially got in, I lowered my target to 1127 because I saw that they could not break through VWAP, and I was like, you know what? If it breaks VWAP, I'm probably not going to get the full 50 cents. Maybe I'll get half of that, which is 27% or 27 cents, 25 cents in that area. And a lot of times, I'm looking for percentage moves on the time frame that I'm looking at. So if you're looking at this 15-minute time frame, all I care about is 1, 2, 3, 4, 5, 6, 7. These candles. I don't care about anything that happened in the last 6 months, 2 days, 3 days, 4 days, because this is what I'm trading off of. I'm trading off of what's happening now. And the same people that were buying it all the way up here, that sold it all the way down, they're probably willing to buy it for a 75 or a $2 discount on a day where it ran up to 13. And now they're not going to be trying to look for it to go back to 1350. That's what the new traders are thinking. Well, it could come back all the way to this high. You're just looking to get a part of the move back, if it even gives you any.
Great thought process. Seriously. Super sound, super low risk, repeatable. Love it. Big fan. And to the chat, speculating about someone buying SoFi. SoFi is a $9 billion company, guys. It's pretty large. I'm not
they're
sure
going to be here in 10 years, in my opinion.
I'm not sure.
And they're going to be doing some big things.
I'm not sure. Like, are you saying, like, I guess
and they're profitable.
I guess that's a drop in the bucket. It is a drop in the bucket for a Visa or a MasterCard or an Amex, but anyway, I'm in SoFi and no intention of selling. But yeah, it's a dog right now. There's no ifs, ands, or buts about that. Jesse, can you remind me again, or put the link in here somewhere as to how people can find your Discord?
Oh yeah, because
I lost the link.
Well, you know what I think I did. So I had someone reach out to me, and they said, Jesse, I believe your link is expired.
Oh, that too.
And So I think that
Wasn't
the
just
link
me.
I gave had I think I may have even put a limit on. Yeah, I just looked at it. I have 100-person limit for each link. So that way we don't get like spammed with like 1,000 fake accounts in there, and I have to delete them all one by one. Because our group, the one thing that we focus on, there's zero spam. There's zero anybody trying to sell you anything at all. It's strictly traders from all aspects. We have 500 people in there, and they are there to help and just basically just give the same kind of like just like Benzinga. You know, we're here to help people. You just want to talk, give your ideas, and then get some advice off of maybe some other people's thought process and be like, you know what, maybe that'll work for me. I put the link in the private chat, by the way.
Oh, darn, didn't even see it. All right, thank you. All right, I'm dropping this link in the chat, everyone.
Before I do go, I know we're at the last minute here. I want to talk 1 minute about some option, just something that option traders that are new may not understand. And I think I went over this a little bit with Aaron when he was taking some trades overnight, and I was like, hey, I would wait till the end of the day because of theta, and I was doing the math on the delta, the theta, and what kind of implied move you would need for the next morning when you wake up to have a profitable trade on that option. And I think a lot of people are buying options going, I think it's going to go here, or I think it's going to go there. You know, this is, I think. Well, if you're thinking when you're trading, you're doing it wrong. You want to do the math, and what works is math. That's what algorithmic trading's doing. That's what the billionaires have. They have computers computing this information for them. And if you're smart enough or trade enough or been taught the right things, then you can do this math based off of that delta and that theta. And I'm just going to do a quick thing. If you buy an option for $100 and you have 3 days to expiration and you buy it at 9 a.m., if the stock stays the same and doesn't move at all, you're going to lose money at the end of the day based off of just the time. And if the stock moves up 50 cents and your theta is 50, then you still are going to lose. So you need the stock to move a point. So if your your theta is 50 and your delta is a 50, then you need it to move $2 for you to even have anything, because the next day you're going to wake up and be negative without that, with the move, and you're losing 2 days now of theta. So if that's too confusing, hit me up in the Discord. I will definitely help you guys out and tell you kind of understanding that. And then what I mean is that same $100 contract, you could be literally doing the same bet, but buying it at the end of the day for 50 cents less.
Right.
Theta equals time. Theta equals time. T is time. All right, Jesse Kaylor, Elite Trading. Put the link to his Discord in the chat. Jesse, have a great one. Talk to you again next week.
See you guys.
All right, we got to hop because the roadmap is live now. Before we go, though, I wanted to do a quick plug. Money Mitch made me aware of the fact that he is interviewing the CEO of PubMatic, PUBM, programmatic advertising company, on his show today. That's at 4:45 p.m. Well, the show is at 4:30. The interview is at 4:45 p.m. Eastern time. We got to wrap, though, because the roadmap is going live. That's our NFT show. Stay tuned for that. Smash that like button. How many likes do we have today, Aaron?
Not enough.
That's the answer. Not enough. Here's your earnings calendar for tonight. Software names and focus: C3 AI, Splunk, Box, Okta, and then a few randos like ChargePoint, Turtle Beach, and Victoria's Secret and American Eagle. But there's your calendar. That's our show. We're done. We'll be back. I'll be back for At the Close at 3:30 Eastern time. That's a wrap. Smash the like with your elbow or your forehead. That works too.
Or your nose.
Or your nose.
Whatever.